Yeah, good afternoon, good morning, students. I just need to know, whether we are live or not. Just give me a minute. Like, by the time I'll get it confirmed. Yeah, just give me a minute. How are you all? I hope everyone is doing really well. Yeah, I just need to get it confirmed. Just a minute. Yeah, good afternoon. Yeah, so basically, yes, we are live, we are live, we are live. Cool, cool, cool. So yes, students, yeah, we are live, we are live. Okay. So yeah, how are you guys? I hope like everyone is doing very well. So we are at an urge to complete our revision series. Okay. So yeah, I'll brief you out with whatever stuff we have done. Okay. So considering SBR, which is one of the most favorite subject, which all the students have, right? Considering it as a first P level paper, I would like you all to refer all the standards. Like in the classes also, I have explained you in the revision part also that okay, these are the standards which are very important. But yesterday when we did the first mock, we got to know it is not permissible, it is not acceptable if I leave any of the standard, because like it's no matter if it is like weightage getting lesser marks or more marks, because to clear we require each and every marks. Exactly, students. So this is where I am at an urge to complete the first revision series of our SBR by conducting today's mock paper 2. So yes, so today students, we are going to study the second mock paper, which we are going to practice such that eventually when you practice on your own, maybe the techniques which we have can be helpful for you. Okay, so yeah, without any further delay, let's begin with the second mock paper. And yeah, by the end of the session, I'm going to give you some important tips and tips how to just write the papers, how to go ahead with the SBR concepts. And yeah, I know if you guys are going to give this December attempt, it's just 1 month. So yeah, in 1 month, what should be your strategy? What should be your study plan? So we'll be discussing that too. Okay, so without any break, without any delay, yeah, let's just start. Okay, just let me now open up for you guys. Yeah, so today we are going to do another mock paper which tends to be important means if you see now students, I have already taught you many questions in the previous video also, which I took it for September 2023 onwards. We have did a lot of concepts which consisted the first question about consolidation. So I know like I myself has given you a lot of questions for consolidation, so I thought like why not today we'll do the questions which used to be there from the previous sessions. Means prior to many years what was the questions, we'll be doing that today. Why? Just because to know like if the question comes from consolidation, we are at a position to solve it. Because yesterday I told you, yesterday in the last class I explained you, prior to many months I have taken a lot of consolidated questions. But yeah, it's we know just consolidation is only the pre-populated spreadsheet is just for 10 to 14 marks. But what about the remaining 15 marks? So we'll be today discussing a concept which consists of some theoretical knowledge also. So yeah, without any further delay, I'll just open up the questions for you. I hope it's visible for you guys. Yeah, just let me just confirm it once. Yeah, so we are basically doing, students, international. Yeah, again, a disclaimer that we are solving the paper which is SBR International. That is SBR International, and not the UK tax variant. Okay, it's not the UK tax variant. It's the international. So whenever I want to try, for example, the practice paper. Okay, just I'll take up a call. Just a minute. Just give me a minute. I just want to take up a situation. Yeah. Okay. So students, whenever we do the questions, or whenever I want to practice the questions, for example, like the exams are coming very near, I'm getting very much nervous. From where should I go ahead? So students, consider yourself to be at the best position when you have the ACCA study resources. Along with that, guys, we have CBE platform where we can exactly practice how it is going to be appear in your examination. So when I'm clicking to my CBE platform and my examination thing, I have to select SBR International. Yeah, students, international. And for example, if you have your exam kits, so definitely in your exam kits we'll be having some questions regarding the international questions also, and down to that we have UK questions. Students, we are not supposed to solve the UK questions, okay, because we are giving SBR International. Okay, students, now we are going to go ahead with the mock, which is basically coming from mock over here, SBR International Practice Exams, which is from March-June 2022. Okay, which is March-June 2022. So yeah, this is a question which I have picked up from that, and yeah, maybe it is visible. Yeah, just let me confirm it. Yeah, I think it's visible, right? Yeah. So okay, so if you see, I have already prepared a question for us, which is eventually going to be very easy in terms of the concepts. If you're clear with the concepts, the questions, all the questions are very easy. But yeah, we need to know the standards. And yeah, yesterday by doing the mock, we got to know it's not a comfortable position if I skip any standard. Considering, this standard is very easy. No, standard cannot be skipped just by understanding, no, this standard is easy, I can manage it on my own. Not that way. We have to practice each and every standard clearly. Just imagine in the prior class, it was IS 40. What a simple question, what a simple standard. IS 40. People leave investment property. Question was for 11 marks. High marks. Yeah, it's like more than 22% to get it clear. Like the percentage. Cool? Okay. So yeah, let's not waste further time. I just want to just have a overview at the chat. Yeah, just give me 1 minute. Yeah, my live chats. Because we have Sukanya ma'am with us. Like I just want to get a touch with ma'am. Okay, yeah, just let me open it. Yeah, okay, so can I get to know like who is there with us in the live? Yeah, guys, I just need to get the names in the chat. So yeah, I'm just wondering for the second. Okay, no worries. Yeah, I'll not just wait more time. Yeah, just we can continue. Yeah. So yes, students, if you guys have any doubt, you are free to message me anytime in the chat, or maybe in the Instagram or Telegram or whatever it is. Yeah. So yeah, question number 1, which talks about the concepts which I told you. I'll be taking it some questions way back, because it's not just the spreadsheet which is important, because we have did spreadsheets. Like I have practiced around 4 or 5 questions, and this is what we have max. Yeah, this is what we have max in the specimens. If you check in the question list, if you check, okay. So yeah, let's first read what is required. Yeah, this is the way we do. Okay, this is the way we do. First, we need to check what are the things which is required. So yeah, first, draft an explanatory note to the directors of Columbia Company to address the following issues. So we are supposed to draft something to them. And yeah, we know it's an SBR, not FR, where only your financial terms will work. No, we have to not just give them, okay, yeah, ma'am, I gave just then the financial figures. Will it be fine? No, the financial figures will not fetch you marks, guys. It's the analysis, the interpretation which will fetch me marks. So I have to write it very precise and in an elaborative manner, that yeah, your examiner should not have like in mind, oh my god, from where did this figure came. He should be getting a clear-cut idea. See, this is a thing, we added this on that, we subtracted this, we have just multiplied it, and it is going to route it through your P&L account. So then he'll be having a clarity that, okay, Baba, our concepts are very clear. Yeah, we are good with our financial statements. Cool, chalo. Now, without any further delay, let's start. Yeah, okay. What's my first question? Yeah, whether the Columbia company should be considered the acquirer. Okay, so some concept of acquirer. So here, maybe they are hitting to the concept of IFRS 10, right? Maybe they are asking, who is acquirer? So guys, who is acquirer? So you'll say, ma'am, who is having more than 50% is acquirer? So yeah, that is something which was very way back, right? But today, to be an acquirer of the company, just the percentage of holding is not going to be enough. It needs to be the control. So maybe I have to like define properly what's the definition of control, where I have to go ahead. Now what's the meaning of control? Let's say more than 50% will not be the position. If I'm having some power over the board of directors, maybe I'm having some other powers which expects me to take economic and financial decisions, operating decisions that I have the position to take, maybe then I'll be the acquirer. So they're asking whether the company is an acquirer or not, should be considered as an acquirer or not in the business combination with Peru company. Okay, so maybe the Columbia will be the parent type company, maybe, and Peru company is the one in which we'll be having some investments that works 9 months. Second, over here, in that only, A's part only. So calculate the goodwill on 1st July 2015. If I'm calculating that, it is giving me hint that over here I was getting a hint of IFRS 10. If I need to calculate some goodwill, it gives me a hint of IFRS 3. Yes, about the business combination. Means when the company wants to purchase some company, definitely the company has to pay them. The company has to pay the purchase consideration. If the company pays a purchase consideration which is excess, then their net assets, that excess amount is goodwill. So we need to calculate it. Calculate the goodwill and explain how the fair values of both the consideration and the net assets are determined. Yeah, so we'll figure out for the fair values also. So students, this was the thing which used to come prior. But today, the calculations are as it is, but we have to just put it in the financial statements. So yeah, we'll be just doing that very easily. Then we'll be having some concept of defined benefit and defined contribution plan, which is one of my favorite, which comes up with IS 19. Yeah, which is one of my favorite concept and my students' favorite too. Yeah. So yeah, without any further delay, yeah, we'll just start it with that way. So what we normally do, we copy this, yeah, and we have to paste it in the solution part. See students, in the question also, in the exam also, I want you to do that way only. Do this way, do this way, so that a lot of your time is being saved if you copy the first part. Let's say I'll go towards the exhibits. Let's see what they have asked us. First, the Columbia company is the parent of the listed company which operates in the telecom industry. Cool. During the year ended on 31st December 20x5, okay, the company has acquired, okay, so they are asking, they are telling us that the company has acquired some new subsidiaries. Cool. So the company has acquired some new subsidiaries and made an adjustments to its pension scheme. Okay, no worries. The group's current year ends on 31st December 20x5. The following exhibits are available on the left hand side. First, okay, this was the question, acquisition of the company. In that I have to analyze, okay, whether the Columbia company is known as the acquirer or not. So contains the information regarding acquisition and consideration paid. Maybe this is helpful for me to answer the first question. Yeah. Second, they have asked us in the question that ma'am, you have to find out goodwill and some net assets. So maybe this will be helpful to find out net assets as on 1st July 20x5. Okay. And last, about the pension plan. Okay, pension schemes and all. First, about the acquisition. So what I can do is, I can just copy the exhibit. I can just copy the exhibit of first. And maybe for our reference, like I don't like to go up on and on. So yeah, that can be better if I do like that. I'll just paste it over here. So I'll get the question, I'll get the exhibit. And in the meantime, in the examination, what will you do guys? You will copy like this if time permits. Right down to that, you start writing the answer. Down to that, you start writing the answer. And once your answers are done, please delete the exhibit. Yeah. So that is something which is available for you guys. Yeah. Let me just confirm it. Yeah, is it there? Yeah. Okay. So yeah, I'm just confirming with the charts. Hello ma'am. Hello Sukanya ma'am. So ma'am, are you able to hear me? Oh yeah. Yeah, okay. Yeah. So Sukanya ma'am, I'm just kept the chat like live. So yeah, you can ma'am anytime message me. Okay, as well, yeah. Maybe if I'm not comfortable with the chat, like if I don't see it, if you have any sort of doubts, you can message me on the WhatsApp also. It's there. Cool. Chalo, chalo, chalo. Okay. So acquisition of Peru company. So Brazil company, there is a company. So there is a Brazil company. So what the Brazil company? Maybe if I want to see the acquirer of the company, my company name is Colombia. The next company's name is Peru. What is this Brazil now? Okay, let's see. The Brazil company is the competitor of Colombia. So it's my competitor. On 1st July 20x5, see, my year ends on 31st July. My year ends on 31st December, sorry. And my date is given 1st July. So maybe half of the year, yeah. So on 1st July, both the Brazil and Colombia company acquired 50% of 5 million ordinary shares of $1. Okay, so here ma'am, both the companies have purchased this much. If both the companies have purchased this much, how will I be the acquirer? Ma'am, I will not be the acquirer if both the company are having 50% share, which turns around to me the concept of ma'am joint venture. Yeah, it can give me a hint that if it's 50% control, ma'am, it is going ahead with the JV's concept. Yeah, let's read it. The consideration paid by the company, my company, consists of what consideration I paid? $8 per share. Okay, so I paid how much? $8 per share. And also, so I'll just write it. What's the Brazil's contribution and what is my contribution? Okay, I'll just frame it. Yeah, it's risk. I would have not copied K. Yeah, cool. So what's the solution I'll prepare? I'll first write whatever things I know. Okay, whatever stuff I know, I'll just try to copy that. Okay, yeah, first. What is my right? Okay, so basically there are Colombia. So Colombia is having what share? Okay, it's given 50%. Same way, even Brazil is having 50%. Cool. So it provides me with joint venture thing. Like I am understanding this, at least for now. I feel like okay, this could be the situation. This could be the situation which is given. Okay. Up next, I need to know what is the amount which I have made the payments for first. Okay. So I have made the payments. How much? Okay, if you can see the purchase consideration, it's like 50% of 5 million shares. So 5 million shares are there. Okay, so the company is having, let's say I can put like that. Okay, how much? 50% of 5 million shares into $1. Yeah, and for that how much I paid, guys? I paid $8 per share. So okay, maybe I have paid $8 per share. Okay guys, this is my working note. So how much would I paid? How much I would have paid? So 5 into 50% into 8. Is it coming around 20? Are you getting things around 20? Yeah, I'm getting around 20. So ma'am, it could be like $20, $20 millions or whatever the stuff is. Okay, this is what I have made it for my own understanding. Okay, just formulating. Okay. The consideration paid by the company is a cash of $8 per share. Okay, and also, actually, I want to pay more also. Okay, I have to pay more, and I'm paying extra 1/20 exchange when the market price of the dollar is 10. Okay, so I want to pay something more. So how much more the Colombia is paying? So over here, if you can see, Colombia is paying something additional also. What's the additional amount the Colombia is paying? So additionally, they are paying 1/20. Okay, for every 20 shares, they pay 1. They have to pay like for 1. Okay, so how much do I have? Okay, so I have 5 million shares. So how much will I pay? Just consider 5 into 1 divided by 20. 5 into 1 divided by 20. Don't think 5 into 1 divided by 20. Don't you think I'll be paying for like 0.25 shares? Yeah, 0.25 million shares. So yeah, if the company is having, let's say, 5 million shares, so how much will I be paying? But ma'am, that is 50% you have to pay. Yeah, it's like 0.25. So how much extra will I pay? And that much I have to write it. Okay, that much I have to write it. So additional consideration which the company has to pay turns around to be additional. If you can say 0.25 into, let's say, 10 into, over here it's 50%. It's 1.25. So I can just consider 50% of like 5 million shares into 1/20 I'll pay into, what's the dollar? $8 I'll pay. If I'm paying this much, guys, I am paying extra 1.25 millions. So this is my extra payment which the company has to make. Clear? I'm just trying to go easily. I'm trying to make it easy. So this is my normal payment which the company has to make. Yeah, this is my normal consideration which my company has to make, and this is your additional consideration which the Colombia company is going to prepare. This is what it's being clear. Now, what about the Brazil company? Achha, I am not writing any answer. It's just that I'm formulating whatever stuff they have given us. I'm just like making it easy. Okay, आगे क्या दिया है? What's they have given? The Brazil company paid $8 for their interest. Okay, for their market price. Sorry, for the interest, but did not issue any shares to the original. Means they have not made anything extra. They have just paid 8. 8 of how much, guys? 8 of what? Simple. This only 50% into number of shares was 5 millions into $1 per share into 8. So guys, if you check, it will be obviously only $20 million. So this shows me who is paying more. Yeah, so you'll be feeling why the Colombia is paying more, why Colombia is paying some additional amount. Maybe they are paying additional amount because they want some control. But ma'am, considering this, I'm feeling that both the companies are having 50-50%. If it's joint venture, are they paying more, something like that? Okay, yeah, it can give me a hint. But you know what, there was one concept in control. Even if I told you, yeah, if you remember, in the previous sessions, you can see basically in the consolidation part, even if I don't have a single percentage voting power also, I can control the company. How, ma'am? If I don't have voting power, how will I control? So ma'am, you are saying that more than 50% is not required? Yeah, not required. For example, if it's the Reliance industry, if Mukesh Ambani does not hold a single penny also, but all the decisions, everything has been controlled by Mukesh Ambani. So today, the word of control is very much important. Control is important. Yeah. So students, a very important thing which I want to say, yeah, over here, turns around. Okay, just give me a minute. Yeah, like I'll open it. One. Yeah, over here I would just try to like explain you some concepts about. Yeah. Okay, students, whenever we need to understand whether the company is in the position to be a parent company and a parent subsidiary relationship, control is the most important thing, right? So what is control? What is control? Is it control something which I have acquired only by having the voting powers that is more than 51%? No, it's not there. So today the definition of control has gone more ahead. So guys, what's the definition of control? If I want to have a control in any of the company, so my control over here will be restricted not with the voting powers, but I need to have the power over the investee. I should have like the ability to get the variable returns, and I should have the ability and the power to have an involvement, considering my ability to actually govern that company, right? To take the operating and the economic and the financial decisions in that company. So yeah, with that perspective, we'll be understanding the question further. Yeah, like that, if they have not given, it's okay. We can understand here. So yeah, the ordinary shares of the Peru has just one voting right. So yeah, each share you get one voting right. Cool. What they have given over here, following the acquisition, after the acquisition, just understand, the Colombia company, like my company, has the contractual right to appoint 60 board of members. Okay, so I get the right to appoint 60 members. Just imagine, if you get the right to appoint 60 members, if there is any decision going around in the board of directors, don't you think your members will agree to you and maybe you will have a greater power? Yeah, because only 40% of the remaining has been appointed by Brazil. Oh, so I am having the majority voting power, board of directors expectations also. So I can try to manipulate also. Yeah, so if I have a higher board of directors appointment, so that shows I am having some good rights. Yes. Then what happened? Brazil company has veto rights over any other amendments. Okay, so the company is having, the Brazil company, next company, is having some rights. If they want to amend any articles, they can do. Also with the appointment of auditors. Okay, so Brazil is also having some right. Okay, Brazil company and Colombia company each appointed one member to Peru senior manager. Okay, so both of them are appointing one manager. It is the senior manager appointed by the Colombia. See, this is very important. Whatever I have appointed a manager is actually the position who makes the key decision regarding the development of any technologies, its principal revenue stream. Okay, so where they should go ahead, like everything has been decided by whom? The person whom I have appointed. Then the market that it will operate and how is it financed and everything. So all the important decision who is taking up? Yeah, my person. The senior manager appointed by Columbia also provides a supervisory note and the right to request the significant activities to get the board approval, such as imposition of restrictions, etc. etc. Means, what do I think? Ma'am, I think like now it's not the joint venture, it's not the joint it's not the joint power. It's basically something like acquiree and the acquirer relationship, where I am having a greater power over the company. So maybe now I, as a Columbia, will be known as the acquirer. So what have they asked us in the question? Yeah, whether the Columbia should be considered as an acquirer? Yes, they should be considered. So over here, we have paid additional consideration also. So why would I pay additional? If I want to take a control, I should pay. Yeah, this is a scenario. So what I will start writing, I have to account it as per, I told you, which standard hits here? Guys, it's IFRS 10. It's IFRS 10. So an acquirer has to book it accounting to as per IFRS 10 about the CSF's consolidated financial statements. Yeah, in which guys, in which I have to account it very clearly about what? About the control. Yeah, I have to book perfectly about control. So when will I say that the investor, or the person, investor means someone who is investing in the company, has the control? If I have the power, if I have the rights to take the variable returns, and if it has ability, it's my ability to utilize, to take over the effects. For example, over here I'll write an investor over here. Yeah, try to understand it very easily. Okay, it's there. Okay, so an investor controls an investee. It has the power over the investee. Yes, it has the rights to variable returns. If the company earns more, I'll get more dividend. Yes, the ability to use its power over the investees to affect the amount of the returns. Yes, so if these three are with the Columbia company, definitely it is what? It is known as the acquirer company. So over here we got to know that there are significant numbers of factors which are going to hit us. Like how? You have to just see the factors. First, what do I think? Acha ma'am, I am having 60% voting right. Yeah. Sorry. 60% of the board of the directors, the Columbia is keeping. Yeah. Along with that, the important decisions, whatever have been taken, is been appointed by the Columbia. This gives that maybe the Columbia is having a greater right. Yeah. So maybe that can all be the factors which I can show. Okay. So yeah, over here. So there are several factors which determines okay, we should be an acquirer. The first factor is what, guys? Okay, the consideration transfer of the ownership. Like it looks like, first of all, what I think, first of all, I think these two people are like joint ventures, because both the parties are having what? Like ma'am, 50-50% control. So I think that they'll be having a JV types, a joint venture, because I think like both the party are going to pay a 50% value of the share into multiplied by 8. Yeah, exactly. Both of them paid, yeah? Yeah, ma'am. Both of them paid 20 millions and 20 millions. But we have to pay some extra also. So yeah. So initially I felt this. This is because the people has to pay that much. Over here. Over here. If you can see, this is because Colombia and Brazil has to pay an equal amount of $8. Additionally, if you see, Colombia and Brazil both have 50% interest. So I think like, yeah, it is something like JV. However, joint venture relies upon there being a joint control. Means if it's JV, we need to have a joint control. Like both the parties should have a proper key operating and financing decision making capacity, which I think the company are lagging. Yeah, the company is not having. So the scenario over here does not indicate that there is a unanimous consent. I don't think like both of them are agreeing. So what is the problem? The case, it does not indicate that it is a unanimous consent. It does not indicate. So definitely it says, okay, it is not a JV. It's not a joint venture. So you have to clearly explain whatever you know, whatever concepts which comes into your mind. So you have to just split it on the paper. That's all. That's all. Cool? Easy? Yeah. Up next, what they have told us. Now let's see. The second factor, what we have to consider over here was, how many people I am appointing? Ma'am, we are appointing 60 members and that people are appointing only 40 members. Yeah. So the second factor over here says that, yeah, we are having 60% capacity to appoint. So that shows the Colombia will be having a right, yeah, over considered to Brazil. Then it is true that the Brazil may have some right. It was given that the Brazil is having some other rights to appoint the amendments. Yeah, if you can see the question, guys, it's there. It's each and everything. Yeah, the Brazil is having some other rights. Okay. If you have other rights, but that is not something which is way beyond. Yeah, that is not something which is very high. So it's true they have some other powers, but it is not so much that it influences the control. Yeah. To find the control, in assessment of the control, it is important that we need to know whether it is going to impact the right, whether it is going to give you any sort of extra additional power. To have an assessment of the control, it's important to consider whether the rights given to the Brazil company is power over investee, or whether they have the power to get the return. No. So over here it's clear cut that Colombia is the only thing. So we need to understand whether these rights are protective right or substantive right. Yeah. So we have a difference between the protective right and substantive right. Substantive right are given to the investor's control. So these rights can, over here, I feel like it's a protective right which is given to Brazil. It's not a substantive right. Okay. Along with that, a similar argument was there. I want to appoint some important people. So yeah, the Colombia has appointed the important people who can take the important decision as the managers. But that is not a right of the Brazil. So definitely all the important decisions, all the operating decisions regarding the finance decisions, who is going to take? My company. Colombia is going to take. Over here, if you can see, yeah, Brazil company and Colombia company has appointed both each one member. It is a senior member appointed by my company who takes the important decisions, and the senior member also takes the important decisions regarding the market and the finance. So I can just copy and paste it over. Yeah. Which my company is at a better position. Yeah. Okay. Okay. Yeah, it's the Brazil company and the Colombia company. Cool. Yeah. So yeah, all decisions have been taken by my company. That shows that my company is having what? My company is having some substantive right to take the important decisions in the key earnings, operating things. That means who is having the power? Yes. That shows the Colombia company is having the power over the other company. Agreed? Yes. Yeah. So therefore, the right of the senior manager appointed by Colombia company therefore appears to be substantive. Clear? Up next, the last line what I can say over here, by giving the further clarification, it shows that Colombia company is having the power over the industries because they can take up the important decisions for sure. But ma'am, we need to calculate this also. If you're paying anything extra, yeah, over here we are paying anything extra, right? So we have calculated it, but now it's our responsibility to help my examiner to understand, like, okay, Baba, this stuff is also important. So we can write, because there is one more evidence. There is one more evidence that, okay, if I am having some right, definitely if I I'm the acquirer, I have to pay something else. So what will then Brazil company for me? If Brazil company is also having 50%, right? But still, the Brazil company will be now my NCI. Because now I have to prepare the consolidated financial statements. Clear? Yes. This is what I have to write it. Further evidence says that my company is the acquirer because we are getting something extra consideration we have to pay. What is the extra consideration which we have to pay? Was it 1.25 million? Yeah. Over here, the Colombia company has to pay some additional consideration. In spite, we have just 50%. But we have to pay. So it can be concluded that the Colombia company is the acquirer and Brazil company is the NCI. Is it clear? Yeah, Sukanya ma'am, just give me a message. Is it clear? Yeah, I know we took a lot of time in this question, but eventually it turns around to be important. So that's the reason. Because initially if I just see 50-50%, things will not be fine. Things will not be fine. Okay, I'm having 3 participants with us. Like, yeah, wow, great. So yeah, right now. So I just need to know, yeah, whether it is clear. Can I move ahead? Do we have any doubts in this? I'm just figuring it out in the chats, okay? Yeah. Yeah, good afternoon. Yeah, Sri Lakshmi ma'am, good afternoon ma'am. Yeah, I'm audible? Cool. Yeah. I think like we are pretty clear with this. Yeah, I think we are done. Yeah. Yes, Sukanya ma'am. I think, yeah, it's clear. We can go ahead. Yeah, I get chats like after 1 minute, so maybe that could be the reason. Yeah, no worries. Yeah, any which ways my chats are open, I'll get to know. Cool. Now, we can go ahead with the second concepts, which we have not yet read, the second exhibit. So yeah, what is my stuff? What I have to do in the examination? Ma'am, after writing the answer, we have to do what? We have to delete whatever the question was. Yeah. So why am I doing so? Just because it makes my question and my answer look more better, and I don't have to stuff for like all the time go ahead and do the calculations. Okay, let me read what's the second exhibit they have asked us. In the A's answer, second point, calculation of goodwill. Okay, which is worth 11 marks. So definitely if I calculate the goodwill, that clearly cut shows me that we have to figure out some or the other thing on the basis of IFRS 3. That is business combination. Yeah, okay. That is business combination. Means if I want to acquire some company, definitely on that day, I would like to know that what is the position of that company. Say for example, if I am the company who want to sell my company, okay, I am not in the position, so I want to sell my company. For example, I'll be having my financial statements, clear? In my financial statements, let's say there will be a lot of assets, there will be a lot of liabilities. So if I want to sell my company, what will be minimum amount which I want? Yeah, that will be at least this asset minus outside liabilities. If I give whatever is the remaining portion, I would want at least that, right? At least that. But if samne wala party or the next party, if he's paying something more, that is known as goodwill, and if he pays something less, that is known as gain on bargain purchase for that person, or the negative goodwill. So yeah, for understanding it in very much details, we have already the YouTube sessions in that we can do it very well. I have already put up with a lot of goodwill concepts also. So yeah, before that, normally if I say, if there is some company who is going to sell itself, yeah, so at what value will they record? For example, my company, I want to just sell it. So I'll be having some assets. Let's say I have purchased a land 10 years prior at $1 lakh. Will I sell it 1 lakh? The book value? Ma'am, no, not at all. So I'll think, if I want to sell my assets, I would like to see if I sell, what is the fair value which I minimum get, right? Minimum I want that much value. So that is the fair value we have to calculate for each and every asset at the date on which the party who is going to acquire is going to book it on the date of acquisition on the very first date. For after that we have to prepare consolidation. Yeah. So yeah, this is the first stuff that they have asked us. So we would like then prepare about the scenarios. Okay, so this is what we are going to consolidate it. So yeah, for that now, if you know, we have the second exhibit, Peru company over here. Net assets on 1st Jan 20xy. Cool. 1st Jan 20xy. I'll put it with blue colors so it is visible. Okay. Describes over here the valuation of assets and the date of acquisition. Okay, yeah. Okay, on the date of acquisition and all we have. So let's move ahead towards the second exhibit. Before reading so big exhibit, yeah, it's not easy. It's not easy. So yeah, what I can do, I'll just try to like copy it here and put it downwards. Exhibit 2. Like trust me students, it's easy. Yeah, this is my exhibit. Okay, we'll start reading it easily. Okay, exhibit 2 says the net assets. So first of all, who is the acquirer? Colombia is the acquirer. So Colombia becomes a parent company. Yeah, my Brazil becomes the NCI, and the Peru becomes the one whom I want to acquire. Maybe it will be my subsidiary. Okay, the net assets of my Peru company reported in the financial statements had a carrying amount of 32 millions on 1st July 20xy. So what I feel, acha, the value is 32. Okay, so we'll do what? We'll try to like book it everything downwards. Okay, so first of all, they have the carrying amount of 32 millions on 1st July. So basically what do they have, students? I'll just formulate, I'll put whatever the stuff they have given. So carrying amount of what, guys? Carrying amount of net assets. So yeah, maybe that only is the fair value. So I need to know, is there anything else which is given or not? So yeah, it becomes 32 millions. Cool. So I understood the first point. However, on the acquisition of the company, the directors of the Colombia has discovered the following. So the Peru company would have told, okay, see, 32 millions is my amount of the net assets. Pay me that much. Are we mad? Will we not inquire something? Maybe yeah, we can inquire something. So we can see, what are the actual net assets? So what my company did, we on 1st Jan 20xy. See, try to understand the dates. Please try to understand the dates. What's that? What's that? 1st Jan 20x5. On what date do I'm taking the assets? I'm on 1st July. So they're talking about for the whole year. Let's see, I have to take only for 6 months. On 1st Jan 20x5, Peru company acquired 6 million 6% coupon at the rate of for bonds for $6 millions. Means 1 million, one over here, one bond is having the $1 as the value. So basically the other company is having like investments, maybe they'll be having, or maybe they would have issued something. So what are they having? If I see, so they are having certain bonds also. So the company has 6 million 6% coupon bonds, is an unquoted company per value $1. The bonds interest is paid annually. Okay, yeah, we know if they pay the interest annually, so yeah, that's good. Due to premium on the redemption having an effective rate of interest of 8%, ma'am. So 8% will be the rate of interest, yeah. So Peru company has a business model to collect the contractual cash flows and therefore collect the cash flows. The Peru company has the business model to collect the cash flows. What's the meaning of collect the cash flows? Do they have to pay? The Peru company has a business model to collect the contractual cash flows from the bonds. So maybe that is their investments. The Peru company is already having the investments. Okay. And if you remember IFRS 9, which we did it, if the company is having like the models, amortized cost model, fair value through OCI, fair value through P&L account, yes. If the company is having the model, okay, Baba, what I'll do, I'll just collect interest and the redemption value, that's all. That's all. Amortized cost. I'm least concerned with what the hell the fair values are. But, if I am engaged into trading and all, the difference goes in P&L account. But if, for example, I want to hold it, but if I get some better thing, I can sell it also. If that is a scenario, maybe it goes to OCI, the fair value changes. Let's see what happened in the first year. The Peru company has a business model to collect the contractual cash flows and therefore measures at the amortized cost. Okay. Colombia company holds the similar unquoted asset, but the business model whereby they have either, for Colombia company, for my company, what is my model? My business model is to get the cash flows, collect or sell the assets. Is it not something like OCI stuff? I'll have it and maybe I'll sell it. Yes. So bonds with a similar risk profile for the similar quoted assets are traded at $2 on that day. Okay, so on the date of acquisition, they are giving me a situation. See, whatever the bonds you have at that value, okay, it's fine, investments. But see, what is the current value today on the date of acquisition? Because I want every asset to be recognized at what? To be recognized at the fair value. So I have to figure out for fair value, right? So on 1st July 20x5, similar profile was $2. Okay, and for that, guys, the discount of 30% is considered. 30% means you will get the payment only for 70%. Okay, so that is something on the date of acquisition we have to do. Okay, if it's just that, how will I start understanding the concept? Okay, for that now, I am not writing it right now. We'll just read for once. And then we'll go slowly. Or do you want me to start writing? Okay, now 2 more things are there. Okay, so basically over here, if you can see, there is something like coupon bonds. Okay, so there is some concept of bonds. I have mentioned it with the, yeah, this is the color, coupon bonds. Over here, one of the, now again, for Peru company, there is some another asset whose fair value is not there. Okay, so one of the identify intangible assets is given. Intangible asset was named as brand. Okay, so they are talking about brand. So Peru company is having some brand. The brand has a carrying amount of $4 on day 1. Cool. So carrying amount is this stuff. You have to figure out what's the fair value. My company has similar product brand and therefore I'm planning to discontinue the trade of the branded thing immediately. Okay. The future cash flows from the Peru company's product acquisition and therefore it's considered nil. Okay. If the trade of the brand product was sold to the competitors, I get how much? If you sell it, you get 5 millions. Acha. So don't you think whatever brand you have recorded it at 4 millions is something less? Yeah. Instead of 4 millions, I should have recorded 1 million. So your asset is going to increase by 1 million. Okay. Last, Peru company is having some severe technical support services contracts which are outstanding. So they have some performance obligation pending. Okay. In short, they have some liabilities. They have some liabilities to be done. Cool. We'll tell them to fulfill the liability. Included in the contract liability, deferred income at this date was 2.8. So I think their liability was 2.8. Okay. So in the net assets by assets minus liabilities, we get the net assets. In that, the liabilities, I have returned 2.8. Now what happened? It is estimated that these contracts will cost 1.7 for Peru company to complete, and a markup cost of 30%. Means if Peru company wants to settle it, it has to pay 1.7 plus 30%. How much it is? Are you getting some around of 1.7 plus 30%? Are you getting around 2.21? Yeah. So if you want to settle, you have to pay this much. That's good, right? It's good, isn't it? Like if I pay only 2.21 and settle my liability instead of 2.8, it's good. It's good. Like, okay, if they have given us the stuff, we'll just read it. Yeah. So Colombia has to measure the NCI at fair value. So over here, whatever is the fair value, I'll book on that. Cool. Easy. Easy. Chalo. So we have read the whole question. I'm just figuring it out for the chats. Yeah. Okay. So I think, ma'am, did we understood the question? Yeah. So yeah, the question is big. The question is big, but nevertheless, it is easy. Nevertheless, it is easy. Okay. Nevertheless, it is easy. Cool. Yeah. Cool. Yeah. Let's read it. Let's go ahead and solve the question. Okay. We'll try to solve it very easily. Okay. So what I first got, ma'am, I got the net value. But before that, you know, what are we going to find out? We have to find out, let's say, the fair value concept. And if I talk to you about fair value, do you remember our statement? Guys, it is 11 marks. So it cannot go like that only. So with fair value concept, we have IFRS. Yes, guys, we have IFRS over here 13, which says fair value means if I want to sell my assets today, what amount will I get? If I want to pay my liability today, what will be the amount which I need to pay? Agreed? So that is known as the fair value. So yeah, with that overview, we'll start writing the fair value concept. It's understood that if I want to understand about the fair value measurement, I have to write like that. The fair value measurement means it defines the fair value as the price paid to settle the asset, means what I can get it if I sell the asset today, or if I want to transfer my liability, what amount I should pay between the proper date and between the market participants. This means you have to understand what is the best amount you are getting it. Either by using it you are getting it the best amount, or by selling it. It needs to be the highest price. It needs to be the highest price between the knowledgeable buyer and the knowledgeable sellers, right? So this means that the fair value is not specific just by rather accounting. Okay, it needs to be the best and the highest use. If you use it or if you sell it, whatever you get the best. So this means the fair value is not entity specific, but rather it should take account the market participants' ability to generate the best benefit out of highest and the best use. Either it is by use or either it is by selling it to other participants. Means if you sell it, you get it better the amount, or if you use it, you get the better amount. Yes. So over here in the question it is given, okay, please find out the goodwill. So yeah, we'll find out goodwill. How? We will see what is the amount of my fair value which I have to pay them consideration. What's the value of the NCI, and if I have paid extra, that is nothing other than the goodwill. So goodwill is measured by doing what? The net assets minus whatever the NCI and what consideration I paid. So yes, without going further, yeah, without just waiting time, we have by now calculated two things. Can you tell me what is the purchase consideration which I have paid? Purchase consideration on the date of acquisition. So whenever this type of question comes now, students, there will be some or the other way where you have some or the other reference. Have I paid the purchase consideration in the first question? Yeah. Did we pay 20? Yeah. My Brazil company also paid 20. Yeah. Ma'am, we paid extra also. Yes. Over here, if you can check on, guys, I have written. Yes, this is what your consideration you made the payments for. Agree? I can copy it and I can just write it. Okay. This is my consideration which I paid. But regarding that, I will not write about the, first of all, my NCI. But yeah, it's okay. I have paid. Forget about NCI. Okay, forget about NCI right now. Okay, so the company paid how much? I paid 20 millions Along with that, I was supposed to pay more. So in the terms, I have to write it very clearly. Yeah, I have to write it very beautifully because it is any which way is 11 marks. So yeah, in the terms of consideration paid by my company on the date of acquisition, the fair value of the cash paid is equal to $8. That means 20 millions I have to pay the consideration. Along with that, guys, I have to pay some extra extra consideration of 1.25 considering the market share. So that is known as the fair value measurement. Clear? This is the first thing. Now, what will be your NCI's balance? Ma'am, my Brazil is also going to pay 20, right? That was the fair value. So yeah, my Brazil is going to pay how much? My NCI is also going to pay how much? 20. Clear? That is 20 millions. Very, very clear. I hope I'm not going fast. You guys are understanding it. See, I'll understand where to take time, okay? So what are the two things I did it? Ma'am, you the entry. I used to always say, if you want to acquire some asset, what you do? Ma'am, net assets account debit. Net asset account debit to, I'll write it to purchase consideration, what I need to pay. Yeah, purchase consideration, whatever I paid, no matter it is in cash or whatever. Oh, yeah, whatever it is in cash or whatever stuff. My rate of 50%. How much I paid? 20 plus 1.5, right? So 21.5. Agreed? Yes, that much is what I paid. Yeah, or I can say 20 plus 1.4, whatever it is. And to the balance of NCI. What's the balance of NCI on the day of first day? So yeah, it's also given to NCI's balance, which is basically only 20, right? Okay, so this is the stuff we already have. So in that it is going to get added, okay? If there is any other net assets, it is going to get debited. If it's anything which is reduced, you have to just credit it, considering the adjustments. Okay, correct. Okay, I would just like to make this stuff, okay. What are they further giving us? Now try to be very clear. In assessing the fair value, what are the things I have to do? Any adjustments, ma'am, it is there, so we have to consider that first. First, what is the changes that they have given? See, my policy and Peru's policy to record that financial instrument was different, right? Okay, I'll just present the question to you. Here first, about the bonds. Over here you get some interest of 8%, 6 millions, but that was on 1st Jan. I have to record on which date, ma'am? I have to record on 1st July. That is only for 6 months. Agreed? Yes. So in assessing the fair value of the asset, it's important where we have to consider the Peru's company also with the same accounting group. Guys, with the same accounting group. I cannot go alag se. I cannot show them different. And I cannot come up differently, okay? So yeah, this is basically for, I can write it that bonds. It's for that bonds, okay? Bonds. Yeah, the group needs to be same. What is my business model needs to be their business model too. Since the Colombia has the business model to hold it and sell it, definitely it is measured in which date? OCI. Yeah, it will not be under amortized cost. Students, like nobody will be over here who will say, okay, ma'am, I don't know this concept, otherwise your preps are not fine, okay? So Colombia has a similar bonds. So what they were doing it? Holding it and selling it, like OCI. So they have to book where? They have to book the difference in the other comprehensive income and not in, and see, if it's amortized cost, they are not interested in any fair value changes. Agreed? Yeah, but we guys will be changed. We guys will be interested. So what's the amount, guys? If you know, we have to pay interest also. We have to pay the principal also. So let's see the bonds value. On the day one, what is the bonds value? On the day one, like on 1st Jan 20x, 5 or 6, whatever the year is. If you read the question, it was presented as, yeah, 6%, okay, 6 million at the rate of $6, okay, and the bonds value is $8, okay. I have to consider for how many months? And we have to consider only for 6 months. So what will be the carrying amount of bond, because 6 months have already elapsed? Yeah, considering the fact, okay, we will book it as such. Considering the fact on on the day of acquisition, that is on 1st July 2005, my bonds value will obviously going to be how much? Okay, we will take into consideration first $6 million. 6 million is my principal amount. So obviously that will be there. Along with that, plus we'll be having interest. 6 million into, oh yes, 6 by 12 months into 8%, 8 by 100. Please do it, guys. Please do it. Are you getting something around 6 into 8% into 6 by 12? Are you getting around 2.24? Yeah, is it 0.24? Yes. So over here it's 0.24, which comes around to be $6.24 on the date of initial recognition. But we have to book what, guys? We have to see the fair value, what is there. So if I'm just writing it, guys, clearly understand this. The carrying amount shows what? The carrying amount on the date of the bond says that it would be recorded at $6.24 millions. Yeah, since the bond are in the unquoted market, and the amount which is not actively understandable, it's not over here observable, because if you know about the fair value, there is a concept which is known as if it's quoted market, if it's unquoted market, how do I value it, right? How do I value it? Because I have to value for what? I have to value for the bonds which is there in the unquoted market. So I have to see that it appears reasonable to use whatever the market value is. So what's the market value is? The market value also is given in the question. If you can see, is the market value given? The bonds with the similar risk profile are dealt at this $2, because I have to value. Yeah, I have to value if it's given or not, the techniques. So this is the market value. So $2 is the market value. So please figure out $2, consider $2, and give 30% discount also. Oh my god, discount of 30%. So what will be left now? So what will be left? Just understand, 6 millions into how much? $2 per share into 70%. 30% is the discount. Yeah, that will be the situation. Guys, what are you getting it? 6 into, ma'am, $2 into 70%. Are you getting something around $8.4 million? Yeah. So now the value which you created was $6.24 is not $6.24. No, guys, it's not $6.24. It needs to be $8.4 million. Oh my god, seriously? Is it increased? Yeah, if it is increased, your investment is increased, don't you think your net assets will be increased? Yes, ma'am. My net assets is increased. Net assets for the bonds have increased by how much? Have increased by what amount, guys? 8.4 minus 6.24. How much are you getting it, guys? Yeah, I'm just doing it. 8.4 minus 6.24. Are you getting around $2.16? Yeah. So this is increased. If this is increased, where will it go? Ma'am, in the net assets you have to pay for that also. Agreed? Yes. So what's that? Yeah. Is there any increase? Yeah, ma'am. So if there is an increase, where will it go? It needs to be added as the fair value adjustment in the bonds. So I'll just write it over here. Fair value adjustment in bonds. Debit. Is the net assets given in the question? Yeah, it was given on the day 1. What's the opening balance? Yeah, it was given here. Why didn't I didn't? So 32 was given. 32. If you can see. Yeah, on the day 1 it was given. The net assets are 32 on first day. So I have to write 32. And then I have to book any adjustments if there are there. Yeah, net assets are 32. This over here I'm getting the adjustments of 2.16. Clear? Getting it clear? Yes. Okay, up next. This I did it for the first part. Ma'am, is there any adjustments further? If yes, we have to book it for them also. I think we are getting it easy, huh? It's not difficult. We are able to manage the question. Now, let's read the second part. Over here, they have asked us about this. Okay, about the identifiable asset of intangible asset. Yeah, ma'am, it's very clear. So you have recorded a $4, but if you figure out in the market, you get the value $5. Okay, so you have to increase it by 1. So if I record it over here, my asset is increased by 1. So fair value adjustment for brand. Debited by 1 million. Ma'am, that is very easy. But will you get full marks? No. I have to record for that. So you have to consider some IS 38 also. Because what is brand? What is brand? Yeah, my brand is something which is known as the intangible asset, right? If it's an intangible asset, you have to understand what is the best possible thing. Whatever you get the best in the market. So it is estimated that whatever I'm getting it is $5. So the best and the highest use, if I'm getting it, if I continue it, it's because if I can sell in the market, I get 5. So it's better to sell in the market and get 1 because it's the best possible use. So yeah, the best possible use is $5. So definitely $1. I can increase it for brand. So I'll just record it over here for that brand also. Clear? Easy? Yeah. Is there anything else left? Yeah, ma'am. There was one more thing. Your liability was reduced. Yeah, over here. My liability. Yeah, so we completed brand also here. So Peru company was having some severe problem in which they were supposed to pay performance obligation for the deferred revenue income or deferred income was 2.8. But if you make the settlement in the market, you get 1.7 plus you have to incur some 30% cost. It is 2.21. So ma'am, there is a reduction in liability. How much liability is reduced? Ma'am, 2.8 minus 2.21. 2.8 minus 2.21. Is your liability reduced by somewhere around 0.59? Yeah. So will it be debited or credited in this? Should I increase the liability? No, ma'am, you have to reduce your liability. So fair value reduction in liability. Also debit by how much, guys? 0.59. 0.59. Agreed? Yeah. But what will I write? Can I write it like this only? No, you have to copy from the question. You copy some question and yeah, you have to present it clearly for the reduction in the liability. So here there is a deferred income. So it must be measured by considering the profits perspective. Okay, the market's perspective. So it shows that there is a reduction of liability in such a phase. If you can do. Yeah. So 1.7 plus 30%, if I'm adding up, I'm getting 2.21. And the market made was 2.8. If you reduced it, your net assets will be increased and your liability will be reduced by 5.9. Clear? Definitely clear. So till here, I could adjust everything. I could adjust every possible aspect I could adjust. Now, considering that, what will I get? Will I get any sort of goodwill? Yeah, ma'am, I have to get the goodwill. Goodwill is nothing other than the net possibility. So yeah, if you see this, what is my goodwill? So if you see all the debit balances, if you total the debit balances, you have something like 32 plus 2.16 plus 1 plus 0.59. Are you getting a debit balance of 35.75? Whereas my credit balance is 21.5 minus 20. It comes to 5.75 as a difference. Yeah, so what's that? What's that, guys? It's nothing other than the liability. Seriously, it's that. Is there anything else which I have left? Oh yeah, what my mistake was? Yeah, my mistake. It's 1.25. Sorry, guys, it's not 1.5. It's 20 plus 1.25. So yeah, it's 20. Yeah, 21.25. Huh? Sorry. Plus 20. Yeah. So it's coming to 5.5. Yeah. It's 1 and 20 plus 1.25. It's coming like 21.25, right? Okay. So yeah, ma'am, I'm getting a difference over here. So what's the difference, guys? My difference is nothing other than the goodwill. So my goodwill turns around to be how much debit? My difference is nothing other than 5.5. Now this is what will fetch you 11 marks. Understood it? Yes, definitely. Clear? I hope we are clear. Yes? Yeah. I'm just waiting for the chats. Otherwise, yeah, we can go ahead. Yeah, Sukanya ma'am, is it done? Is it clear? How are you feeling? Like it's okay? Is it okay? Yeah, I think it's very easy. Yeah, cool. I think we can start now for the next question. Yeah, the third point. Yeah, the third point. The last question, or like the last exhibit over here for the completing the first question. Okay, yeah, so we have completed a lot of stuff, right? and a lot of knowledge also we gained it. Yeah, this is my third exhibit which talks about the pension scheme. Okay, so pension scheme. Let's see what they have asked us. Okay, how does that benefit, okay, the DBO, okay, so what's DBO and DBP? Yeah, you remember? Defined benefit contribution plan, defined benefit plan. So, okay, in IS 19, if you have certain doubts, we have a lecture for IS 19 also in the YouTube, which it's there, I think in the day second I have taken up. So, okay, what's IS 19, guys? For example, if the company has the liability, okay, in future they have to pay to your employees, let's say pension and something like that. So the payment is to be done after, let's say, 1 year or 2 years or 5 years or 10 years or whatever it is. So should I book the expenditure only at that year? So ma'am, it's not possible, right? If you have to pay the expenditure on that year, in the year when actually the payments is going to be liable, but you have to book the expenditure over the period of the services the employee has rendered me. Okay, so for that we have a DBP and the DCP. So basically it's a defined contribution and the benefit plans. So what we do, we have somewhere a liability and somewhere we have an asset. I told you if the question comes from this, we have a liability and we have an asset. So I have to incur a liability every year. I have to book the interest on that every year. I have to have some current service cost, have to pay the benefits, get the closing amount. Similarly, in the benefit plans, I have to make the investment somewhere, get the interest, maybe have to contribute more, pay the benefits out of it, and yeah, get the final settlements done. So yes, students. So yeah, with that overview, we can understand this question. So how the benefit plans and the contribution plan needs to be accounted at the year end. Okay. So I've taken up a lot of stuff. So yeah, what I can do is I'll just now try to copy so that I'll not go ahead more and more. Okay. Yeah, exhibit 1 is done. Exhibit 2. Something only from the exhibit 3 is there for the pension scheme. So yeah, it's okay. I'll just copy it and paste it over here. Students, I want you all to do this behind the exam, like if possible. Yeah, this is my question. This is my exhibit. Okay, let's read it. Yeah. So the company, my company is having some pension plan also. So company has for many years operated a DBP scheme, the defined benefit pension scheme. Okay. On the day, okay, at 1st Jan 2025. So on the day 1, the fair value of the pension schemes, asset and liabilities, I always saw that they'll give you a present value, they'll give you a closing value, and etc. stuff. So what is my criteria to do, students? It is something which is very easy, so please do it that way, which I'm just trying to put it over here. Insert a table where you can get the liability stuff, you can get the amount for the liability, you can get the asset, you can get the amount, you can get maybe ceiling amount, maybe that 1, 2, and you can put it like some columns. Okay, what I can do is I can just extend it. Okay, so yeah, it is little bigger. Yeah, little bigger. Okay, little bigger. Maybe I need to make some more bigger things, but at least for the time being it's enough. Okay, so let's see what are the stuff they have given us. Okay, so day 1 thing they have given on 1st Jan 2025, the fair value of the assets and the present value of the liability is given on day 1. Okay, that we will put. The total present value of the future refunds and reductions means, okay, so on day 1, if you are having some liability and assets, you know one concept of asset ceiling which I explained. Means if I'm having some, let's say $100 liability, if I'm $120 asset, so I can use 100 definitely from my asset. So my remaining asset is 20. But they have told that from that asset you can utilize more, but you have to keep minimum of $4 in your asset. So maybe further 16 I can use it. Okay. So what they have told on the day 1, when your liability was 200, your asset was 260. So maybe you are having $60 more asset, out of which you can utilize something, but at least 20 you have to keep aside. So maybe $40, ma'am, I can utilize it somewhere else. Yes. So they have provided us with the table on 31st December 2025, and they have written that there is a curtailment. Ma'am, what's curtailment? There is something cut short. So what you thought your liability should be has reduced. Yeah, there is some curtailment in the plans. If there is any curtailment in the plans, it goes in your P&L account because it's something like settlement. Okay. So what they have provided, the discounting rate is given 5%. Why is it going to be useful? It's going to be useful for calculating the interest. Yeah. So something about the dollar millions is given the question. Ma'am, current service cost. This current service cost forms the part of your P&L. Yes. Cash contribution. Ma'am, we have to add it in investments. Yes. Then benefits paid. Ma'am, we have to reduce from liability also, assets also. To reduce from liability also, slash you have to reduce it from assets also. Guys, you should know, you should know these concepts. And my students knows all these things, I am pretty sure. So Kanya ma'am, aapko pata hoga ye, right? Yeah. So scheme curtailments. Okay, if I'm having any curtailment, so that is a cut shortment of 28. Let's see. Payment to employees are made on the settlement at 16. Oh. So your liability will be reduced by 28 and you will pay only 16. There is a faida. Ma'am, there is a faida. How much faida? We will do that much. You will understand it. Just give me a minute. So yeah, ma'am, we'll understand it like how much benefits you have made it. Okay. Yeah. No worries. I think it's visible clearly. Yeah. Okay. At 31st December 20x5. Yeah, ma'am. Always they'll give you what? The closing amount also. I have to find out the difference. OCI and all. Yeah, you remember? Okay. On 31st December 20x5, the fair value of the pension asset was estimated. Okay, so basically they have given about the assets. Fair value was given of 242 closing, and the closing liability is 195. So you remember one concept, my asset is more at the closing and liability is less. So we get the difference, net defined benefit asset. Yeah, so the difference is NDBA. Okay. The total present value of the future refunds and reductions was 25 millions at the December end. So basically they are asking about some asset ceiling which we have to keep at the year end. Now this is something which we have to take care. Okay, the company intended all the new employees to be offered a defined contribution rather than defined benefit plan schemes. Okay, for that the contribution of 0.5 was paid in the contribution plan for every new scheme, so for every new employees over the last 3 months for the year. Now this is something which we need to learn it. Okay, but before going ahead, we have to see, wherever we make the table, it is very easy. But we always have to write the exact thing. Yeah. So what is known as asset ceiling? So they have asked us a lot of time. So yeah, ma'am, whatever is less, for example, what is my liability and what is my asset? Whatever is less, I have to consider that. For example, the present value means the day one, for example. So I'll write it over here. When the benefit defined benefit plan scheme is in surplus, means you are having more assets, you have to keep some surplus aside. So I'll just formulating to write. Yeah, if you can see, when the benefit plan scheme is in surplus, IS 19, employee benefit requires the surplus amount, whatever surplus amount, you are having more assets, to keep it as a side, that is the surplus in the plan, and the present value of any benefits, if you are having any reductions or etc. thing combination, let us give a minute, to be kept at a side. So that is some asset ceiling. So that will be there in the question. So how much asset ceiling you have to do it? Consider. Okay. Then on the day one, can you tell me what is the asset ceiling? Okay, so what we will do, we will try to answer it like that way, which I normally make it, and guys, we also have to make it. Okay, so first of all, whatever is my like, see, this is how I make, it's upon you all. Okay, so I'll prepare the liabilities, the amount. Over here I'll be having the assets, the amount, and over here I'll be having the difference, or I can say net plan assets. Okay, so net assets or net, either the liabilities or the assets. Then I have to go ahead with the ceiling adjustments if I'm having any ceilings. And yeah, finally it is known as the net plan assets after ceiling, after a ceiling. So over here it's after ceiling, and over here it's net assets or whatever the stuff, it's over here before ceiling. Okay, it's over here before ceiling. Net over here, I can write it before ceiling. Okay. Okay, I just wrote it to the max. So what's the liability on the day one? Okay, I would have added one more date, but it's okay on the day one. Otherwise the dates I would have added, but now let's see if I can add one more. Insert column to the left. Oh, just give me a minute. Oh, I'm so sorry. Don't say it. I would like to make all the stuff. Only one I wanted to add now, Baba. Yeah, guys, you just try to understand it. I'm trying to make it very clear, but then it's going ahead. Okay, figure it out, not. Yeah, okay, on the day one. Okay, I'll write it on the day one somewhere over here. Yeah, just. Oh, all this stuff happens with me. Yeah, just wait a minute. I'll take up 1 second a break. Just a minute. Yeah, I was just able to manage things. Yeah, it was getting it all clumsy, very clumsy. Okay, cool. Chalo. So I just made it over here. Okay, yeah, it's something below the question only. I just prepared it. So yeah, I will write it. Okay. So chalo. On the day one, what is my value? So okay, on the day one, day to one, basically on the first day, opening I can record. So my opening liability over here, my benefit obligation. So my present value of defined benefit obligation, DBO, I normally consider, my students knows that. Over here it is given of 200 millions and the plan assets value is 260. 200 and 260. Cool. So it is 200. Yeah. It is 200 and over here my fair value of the asset of the plan assets it's given 260. So do you have extra? Yeah, before ceiling I am having extra 60 asset. What have they told? How much you have to keep it aside? Guys, I have to keep it aside whatever. But I have to keep, after ceiling it should be 20. So okay ma'am, after ceiling it needs to be only 20. Only 20. So how much can I further use? Ma'am, you can seal. You can use it 40. Yeah, ceiling adjustment can be done 40. Have they given anything on that? Yeah ma'am. We have some interest given at the rate of 5%. We have to add it everywhere. Yeah. So it becomes your interest expense. Interest at the rate of 5%. So if it's the liability, it's the interest expense, right? It's the interest expense over here, which goes in your P&L account. But you know, students, it goes net, right? Interest expense is how much? 200 into 5%. Please do. Are you getting 10? Yeah. What's interest income is how much? Ma'am, it's 260 into 5%. Am I getting 13? So yeah, ma'am, I'm getting some better way. Yeah, I'm getting some better way. But what's up next? How are I going to mention it? Yeah. So I got the asset ceiling of it now. But then if you take up, ma'am, I'm having some extra 3. But if it's sealed, so what's that? That much you just have to cancel it 40 into, ma'am, let's say 5%. Is it 2? Yeah. So minus 2. What's after sealing? How much interest? Ma'am, it's only 1. Okay. So this is what we just made it. Later on, do I have any contribution or payment? Hey, ma'am, current service cost. Hey, what is current service cost? Ma'am, it's the liability. It's an expenditure, current service cost. So how much current service cost do you have, guys? That is 30. Cash contribution is 21. 30 and 21. Okay. So, ma'am, it's 30. Over here, ma'am, I have the cash contribution of how much in the asset side? It's the cash contribution of how much? 21. Is it 21? Yeah. So, do I need to do any set of nets and all? So, yeah, ma'am, over here, it is net. If I just take it, it's not required to take net. You can make it downwards also. You can just cut it and maybe you can paste it here. So that, okay, over here, ma'am, My net thing comes over here is an expense of minus 30 like before that, and ma'am over here I'm having an asset of 21, right? Okay, here I'm having an asset of 21. So after sealing also it will be 21 over here. After sealing also it will be like 30, because I'm not going to seal for any expenditure stuff. So this is going to go in P&L account. That is something which we know. Up next, ma'am, benefits we have paid. It gets cancelled. Liability also reduce, asset also reduce. How much it is, guys? 25. So I'll record it over here, ma'am. The benefits paid over here, the benefits are minus 21 it was, or 25 it was? Yeah, 25. Minus 25. So 25 from here, 25 from here. So what if I record minus? I'm not putting brackets, okay? So yeah, also here also benefits. Minus 25. If you take up the total, ma'am, it will be 0. Nothing will be pending over here, right? Up next, ma'am, schemes curtailment. Oh. Now this becomes important, okay? Just try to understand. Your scheme has been curtailed by 28, where you have to pay as a settlement only 16. So how much your cash is going to go? Ma'am, only 16. Your asset is going to reduce by 16, but your liability will be reduced by 28, right? Yeah. So definitely your asset will be reduced by how much? Because it's a curtailment. Your liability is going to reduce by how much? It is going to reduce by 28. So liability will be reduced by 28, but whereas your asset will be reduced by 16. So is it a good thing? Yeah, obviously, ma'am, it's benefit of 12, right? It's a benefit of 12. So yeah, it's a benefit of 12, agreed. So I'll just put it 12 over here. Up next, ma'am, we are already done. I'll just copy it over here. Maybe I can insert down. I can row below. Okay, I can have here, ma'am, the balance at the year end. Is it given anything? Yeah. If you read the question, ma'am, all the stuff we have done. 31st December 2025, the fair values position of the pension scheme asset. Asset is given 242. Liability is given 195. Asset is given 242. Liability is given 195. Okay. And if you remember, I was doing the same. We were just taking up the total. Ma'am, what it should be? 200 plus 200 plus 10 plus 30 minus 25 minus 28. It should eventually be 187. It should have been. But your liability has been increased. Oh my god. By how much has your liability increased, ma'am? Minus 195. Ma'am, it is increased by 8. Oh my god. So this is your difference. It is, ma'am, increased by 8. So it's minus 8, right? Yeah, it has increased. But what about the asset? Your asset should eventually be how much? Please take up the total of this. Okay, if you want, you just take up this much. 260 plus 13 plus 21 minus 25 minus 16. It should eventually be, ma'am, 253. Oh, it should have been 253. Should have been 253, but now, ma'am, it is reduced. It's only 242. Ma'am, it's reduced. Minus 242. It's reduced by minus 11. Minus 11. So if you see, it's a net loss. As such, a loss by what? Do I put this stuff in the direct P&L account? So no, ma'am, we have a situation like we can put it directly in the OCI. So yeah, we used to do directly. You remember OCI? Minus 19. We used to take a stuff of minus 19. Yeah, taking up the total. Minus 11 minus 8. It's minus 19. Okay. So this is what I just did it. So all the stuff, if you did it, how will your examiner know? So we'll be just trying to write it easily. So first of all, please try to understand the first line. What will be your asset ceiling? If you see, your asset ceiling is 20, right? Over here, I got my asset ceiling at 20. So for that asset ceiling, I will just write it like that way. So as on 1st Jan 2025, the surplus of 60 is there, but the asset ceiling is restricted to 20. So I can just restrict it to 20 millions. Simple. Now what will I get the interest? It's 1 million for my asset ceiling. And what it is? Yeah, 1 million is for your asset ceiling. This interest of 1 million. Yeah, okay. So what it is? If you see, the interest on the opening asset will therefore be adjusted, and only 1 million will be recorded in your P&L account as an interest income. As you can see over here, after ceiling only this much is pending. So now this becomes your net. So only that much you will account it as your income. Okay, just try to understand. Means if you have sealed this much, so what's the remaining? Only that much you will book it. Cool, easy. Up next what I have, ma'am. So you'll say, ma'am, I have some cash contribution and benefits I have paid. So yeah, if I have cash contribution, what will I do? I will add it in my assets. If I have benefits paid, I will reduce it both from them. Yeah. And if I am having current service cost, ma'am, I will put this stuff in the P&L account. So whatever you know, please let your examiner also know what are you going to write it. So the cash contribution of 21 to be added in the schemes. Benefit pays needs to be deducted from both the asset and the liability, and the current service cost, please put it into the P&L account. I hope nobody is having any sort of doubt still here. Sure, simple, easy. So students, we have did all this stuff, if you remember. Now what was ma'am pending now? What about the next? If you remember, students, over here, ma'am, this curtailment 28 liability will be reduced, but cash will go by this much only. So ma'am, 12 is a benefit, yeah, for curtailment. So for curtailment also you have to present the answer. The rest by IS 9, we have to first put up the curtailment also stuff. So how will I get it, guys? Over here. So IS 19 says that we must first understand what's past service cost. If you remember what's past service cost, I have explained you. Current service cost means current years. But for example, if the plan has changed, the gratuity percentage is changed in my example. Yeah. So that gain, you have to transfer it, yeah, into the P&L account. So yeah, the gain needs to be recognized in your P&L statement equal to 12 millions. Is there any doubts? Pakka? No doubts? Now ma'am, what's next? Now the actuary has came and has valued this stuff. Ma'am, we are having a net defined benefit asset. Yeah, defined benefit asset, because we are having more assets, right? How much more? 242 minus 195. Is it how much more, guys? Is it more by 47? Yeah. Please do it. 240, 95. Is it 47? Yeah. So what's that? Yeah, the actuary has valued this scheme. Means it says, okay, I'm having the valuation of surplus of 47. Cool. Immediately after curtailment. So what is the loss of, if you can see, when I was having a loss of 19, right? 19. Now where is this loss going to root it to? So it's known as a remeasurement loss, which definitely goes in your OCI. Yeah. So we'll just record that first. So I'll be having 47 and the loss of 19 goes into your OCI. So after curtailment, which will result in the loss of 19 millions, right? It will result in the loss of 19 millions. Cool. It's there in your stuff. So just try to analyze the things. Yeah, cool. However, if you can see from the effect, just try to understand the effect of asset ceiling. Yeah, it is shown that you have recognized over here the gain of how much? 24. How 24? Okay, this OCI now, everything stuff, I have to book it over here only. Yeah. So what's the situation over here? NDBA and all. If you can see, okay, here, please calculate 20 plus 121 plus 21 minus 30. Okay, is it double time I have written it over here? Yeah, it's there also and it's over here also. Yeah, if I'm cancelled it, guys, it's 24 stuff here. It's 24. And what about your asset ceiling? Ma'am, it's minus 42. If you're taking up this stuff, it's 24 and the scheme has given one question. Yeah, the last thing, if you can read it. The total present value of the asset ceiling was 25. So if the year end asset ceiling was 20, see, what are the things we have to do? Cash contribution is to be routed through OCI. PNL? No, ma'am, it is going to be added and subtracted. Yeah, curtailment, ma'am, it goes in PNL account. Yeah, expenses goes in PNL account. Anything at the day one asset ceiling goes in PNL account or the stuff. Okay, so if you take up this situation, you get like 21 plus 12 minus 30. Yeah. So what's the balance, guys? What's the balance in your PNL stuff? In the PNL, how it will be? 1 minus 30 plus 12. Are you getting 24 as the balance? Yeah, cool. Students, please try to understand. Please try to understand. The cash contribution is also there. Yeah. Acha, I forgot to write it like, okay. Yeah. So it's 24. And over here, they have given, okay, it's 25. So if it's more, yeah, if it's more by 1, what will I do, guys? What will I do? I'll just book that gain also. I'll just book that gain in your OCI also. So yeah, it's simple. It's that simple. So yeah, I would like to book that gain of 1 million also in your OCI. I hope we are very clear with it. Yes? person has did a cash contribution here, the Columbia intends that new employees are also going to be there. For them, I have to make the payments. Means with the contribution plan. Okay, if it's a contribution plan means, ma'am, today only you are doing the contribution. And if you remember, ma'am, we were having DBP. It's different benefit plans it has to go. But if it is a contribution plan, ma'am, directly into PNL account only you can put it. So if this is basically, yeah, the contribution thing, contribution will directly go in your PNL stuff. So yeah, if it's a contribution thing, it goes in your PNL stuff. So if you can mean that over here, you don't need to create any sort of assets and liabilities. Why? It's not your plan. It's not your defined benefit plan. It's just your contribution. The question they have given to confuse you all. But please, this means that the correct contribution, whatever you have paid, no assets and liabilities is to be created in the PNL, in the statement of financial position, but directly it has to be recorded in your expenses. I hope it's like everyone is very clear with the first question. Yeah, is it fine? Yeah, clear. Yeah, I'm just figuring it out for the chats. Yeah, I hope we are very clear with it. Yes, Suganya ma'am, we there? Okay. So yeah, without taking any sort of breaks, yeah, I'm just going to continue with the second question also, and maybe then we can take a break. Because the next two questions are very easy, which will again be very easy for us to understand. Yeah, just was figuring it out. And yeah, then maybe we can take a break and I'll have my stuff done. Maybe I'll have my lunch. Yeah, let's see. Okay, I'll just open up the question number 2, which is also very easy. And yeah, it's cash scoring. See, only question number first takes a lot of time. Otherwise, it's all theory, which is not difficult. Okay, yeah. So yeah, is it visible? Yeah, I think it is. Oh, it went off. Now it has opened question number 2. Question number 3 is there. No, I want question number 2. Yeah. Okay. Yeah, it's there. Okay. So let us just read what they have asked us. Some simple things are there. Okay. So yeah, always question number 2 is there for what? Ethics. So yeah, discuss the ethical issues raised by the company. Okay. Reward will be given. Cool. Discuss the first thing. Discuss the calculation when a company, this new company, B company, I'll say, should recognize an impairment loss. If it's an impairment loss, which standard hits? So you will say, ma'am, IS 36. IS 36. Maybe they'll be asking some questions from the impairment stuff. Yeah. Let's read the question. Let's read the background of the story, and then we'll start formulating the solution. Yeah, we have to develop the solutions very well. Yeah, let's just read what's the question that they have asked us. First of all, the company is a mining company. Yeah, so some mining, digging company or whatever it is. So the investors of the company have received an earnings from the mining projects as a return of ROI. So they have returned some ROI, return on investments. Year ends on 31st December 2027. So the following exhibits are given on the left hand side. The first exhibit is impairment testing. So before I go ahead with the impairment concepts, I'll just try to mug up all the things. What's first of all impairment? For example, if I'm having any carrying amount in my books of accounts, and if I want to see at the year end, what will I do? So ma'am, you have to check whatever is the fair value available in the market. What if I say the fair value is less than my carrying amount? Ma'am, it's a loss. So when we are testing for impairment does not arises like all the time. So for that we have some indicators, some internal, some external indicators, right? The indicators becomes very important. If I am having anything which I feel कि भाई there is a chance that there will be certain losses and there is some suspicious thing, so what I can do, I can test for impairment. What I will think, अच्छा if I sell in the market this asset, what will I get? Or if मैम जैसा भी है ठीक है मेरा asset है, I will use it. Means if I don't sell in the market, instead I use it, what will I get? The fair value, right? So basically we have two concepts for impairment testing also. We have to understand what is my carrying amount and my recoverable amount. So if I write all these words now, I get marks. Yeah. So what's recoverable amount? It will be always the situation. What is my fair value if I sell? What is the value? Present value in use if I get. Whatever is more becomes my recoverable amount. Still, if it is not more than carrying amount, only then if there is a loss, only that loss is to be booked in your P&L statements. Then we have some hierarchy. Achha. If I'm having loss, what should be first settled? Yeah, we know that there are two things for whom I don't have to see whether there are internal indicators, external indicators. I don't care. What is that? Goodwill or the intangible asset who have the life which is unlimited, means I don't know for how many years it is going to get amortized. Yeah, cool. With that overview, we have some concepts which is known as CGUs also. Cash generating unit. Means if I cannot get one asset whose value in use is available in the market, I don't get, like how will I use it? For example, I gave you the iPad and the pen. In the market I can get the selling price, but what is the amount if I use it? So I generate, if I add on some 2-3 assets together to make a unit, the smallest identifiable unit. So yeah, with that perspective we'll study. Okay, what they have given, impairment testing on mines. So when it is mines, we have a concept of decommissioning provision. What's the decommissioning cost? What's decommissioning provision? If it's mining and all stuff or factory if I'm implementing, there is a huge chances that huge probabilities that I feel that if I'm having this stuff, if I'm using it, definitely I'm going to spoil the asset and all, spoil the land and all. So maybe at the end of the life I have to like make a restorement, like I have to make the things very clear. So maybe because of that I'll be having some cost. So let's see. So describe the decommissioning provision associated with the mines and its potential impact on the mines. Okay, so this is certain cost and everything they have given it. Students, it's very simple. Please try to understand. It's super simple. Yeah. Okay, the company has committed itself. Yeah, if I'm coming in the middle, I'll just be aside. Yeah. Okay, the company has committed itself to decommissioning, means they have promised, okay, by the year end, I will do what? I will make a provision of 53. Means once the word is done, I will do whatever mistake I have done, means whatever kharabi I have made, I will restore it back. But the life is after 5 years or maybe less. So we have made a provision. Along with that, if you remember, I normally add it to the cost of an asset also. Yes. However, the directors are not sure how the provision will impact the impairment testing at the year end. Okay, we will do it. At the end of the life of the mine, its reusable components were dismantled and sold, and the carrying amount is given at 200 millions. Okay. The following information is available on 31st December 2007. So carrying amount of the decommissioning provision was 53 by the year end. So I have to see what's the carrying amount. Yeah, what's the carrying amount? First of all, we have to figure out for the carrying amount. So most of the liabilities over here while calculating needs to be taken care of. Okay, and you know what? Whenever I'm taking care of the... Okay, I'll give you a hint later on. First of all, we need to read it. Yeah, what's the question? Present value of future inflows means if I sell in the market, I'll get some X amount. But if I use it, I'll get some Y amount. So what's that? If I use it, I get the cash flows of sale of usable. Present value is this, 20. Selling of some mining outputs is 203. And the cost for that thing is 48. So if I say you, can you tell me what is the present value? Just writing over here on in the question only. And the present value comes around to be 20 plus 203 minus outflow of 48. Which gives me up a total of 20 plus 203 minus 48. Is it coming nearly around 175? Yeah, ma'am. We are getting something around 175. Is it so? Can I take that much only? But ma'am, beyond that, I have to do one more thing. It's a promise to minus the 53 also. We have to pay, right? Yes. That's your present value because you're getting it as a situation on the day one. Oh, that becomes your day one situation. Yes, you have to book it that much because that is something that you have to pay, right? At the end. So your amount will be, let's say, 122. 122. Agreed? It's 122. That is a present value, means if you use it. But if you want to see the carrying amount actually, so my carrying amount of mines is, let's say, 200. And I know on the day one, I have to also pay what? The decommissioning cost of 53. So maybe on day one, I'll be having my carrying amount worth at 200 minus 53. So ma'am, it's 147. So what's your loss? So I'll see my recoverable amount is 122, whereas my books of accounts carrying amount is 122, ma'am. So there is definitely a loss of 25. So yes, there is a loss of 25. So maybe I have to charge the impairment for 25. Okay, this is what we just got it. Is it so simple to find it? Yeah, but to write is more important. Okay, so what I'll write it. First of all, IS 36 says what? About impairment of assets. So we have to see for how much marks. They would have not asked for more marks. They would have not asked for 5 marks only. Yeah. So accordingly, I have to formulate the answer. Yeah. So you have to tell about some assets, about the CGUs and all. So yeah, impairment of assets says it requires the carrying amount of the recognized liability to be deducted from both the amount. Why? Why value in use and CGUs? Because over here it's a decommissioning thing. So if you're getting something on the day one in your hand, yeah, from that also it's an expense, and some expense on the carrying amount also. So both of them I have to reduce it. Simple. Up next, yeah, I want everything with black only. It's like coming up in the eyes. Okay. Yeah. Up next we have what I will do with the decommissioning. The amount of the decommissioning provision is used to calculate the net recoverable amount. Yeah. So net recoverable amount is what? Whatever I'm getting it at the end. So it's a carrying amount minus any adjustments for decommissioning provisions. And if you remember what is decommissioning provisions, so it comes up as per IS 37 also. That is provisions, contingent asset and contingent liabilities. So the amount of decommissioning provision is used to calculate the net recoverable amount, because I have to deduct it. Because I have to compare it with the other provisions also. Yes. So if you see the cash flow projections, you will be having some assumptions. So I have to do for the impairment testing also. So as on 31st December, I have to write it as on 31st December 20x7. Yeah, what will be my situation? Present value is given. Yeah, I'll just write it in short. Okay, if you want, I can copy it. Why to waste time, right? If it's available in the question, I can do like that. Present value of all the stuff. So all these three things, I'll just write it. Present value. It's the present value. I have to find it out. So what's the present value, guys? It's this. So if you take the total, what it is, ma'am? So obviously this is plus 20 because it's a inflow 20, inflow 203. Ma'am, it's an outflow of 48. So it's minus 48. And by the end, what I have to do, ma'am, I have to even do the decommissioning cost. Decommissioning cost. Yeah, that also comes up to 53. So please reduce that. So you will get the present value. So if I'm doing that minus 53, what is the amount I'm getting it? Yeah, please do it. Is it 148 minus 53? Am I getting like 122? Yeah, so my amount turns around to be 122. What's that, guys? It can be my recoverable amount. So what's your carrying amount, guys? So this is my recoverable amount, right? So what's my carrying amount? If I just check it, in the question it was like 200. Yeah. My carrying amount is basically about the asset or the mines was given 200 minus the decommissioning thing. Decommissioning cost was, what's that? 53. So do you get an amount equal to 147? Yeah. So what do I get? It's just that the impairment loss is equal to carrying amount minus the recoverable amount. Yeah, which comes up at around 147 minus 122, which is equal to 25, which will be charged directly to P&L account. Yeah. So the recoverable amount is less than the carrying amount, which we have to charge it into the P&L statements. That's all. Cool. Understood. Understood. Very simple. Yeah. Very simple. Very simple. Very simple. Yes. Easy. 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 Are there any doubts? No. No. It's very simple. Like the most simplest thing, which I could like feel in the question. Like yeah. Up next, over here was given with the second question. Yeah. Discuss the ethical issues raised by the person regarding the blockchain technology. So basically there is a technology, so we don't need to learn some technology. So it's basically a technology which the company has to like implement. So what happened, whether the like the auditor or the person, the author has required is properly, whether the accountant has done the work proper. So discuss the ethical issues raised by the implementation of blockchain technology from both the chief accountant and the FD's perspective, and take the appropriate actions and resolve this issue. So all the theoretical knowledge you have to put it regarding the ethical issues. So yeah, without like dealing anything, so what they have written, blockchain technology means it provides the information about ethical issues created by implementing the technology. Okay, so what is the technology that they have given? I would like to just copy it and paste it in the answer, and in which it's small. So yeah. Yeah, so let's read it. First of all, okay, it's second. So blockchain technology says the company plans to implement some blockchain technology to store. I'll just brief you out what it is. So basically, there was a technology and the person was very equipped. So he was knowing all the stuff, what to do and what not to do. Okay. And what eventually happened after using all those stuff of the technology, he just left the company after gaining all the knowledge. Like there is a girl, like yeah, so she left. So now can she know whatever the knowledge she was having and whatever she was equipped with in another company? So as such, yeah, she can use her knowledge for sure. But if it is as such which is very much confidential, then please don't leak. Yeah. So in lot of companies there are something like, if I know the patent, like how to manufacture this, or I am having some good technology, and if it is something which I have arrived at from that company only, so it is not proper to like say and to leak all the information, unless it is something which is not sure in the contract. Yeah, so maybe contracts can also be helpful. So let's read it. So my company plans to implement a technology to store all its data relating to its mines, trading, and to certify the ethical sourcing of all its raw material. Means I have prepared a technology where the confidential information about some certifications, tradings, mines relating to data I have to store. The chief accountant, Ms. Pleasant, is currently developing a technology that will be filed for the patent. Okay, that will be filed for the patent. Okay, for the patent. So it may be confidential. So Mrs. Pleasant has only recently taken up the post and has discovered that the work done at her previous employer, Gypsum, is relevant to the project. Okay, so she was working somewhere else, the Gypsum company, and she understood like, yeah, this is something like she was knowing it from the past. Like Mrs. Pleasant has only recently taken up the post and has discovered that the work done at her previous employer is relevant to the project. If Mrs. Pleasant discloses this information, it will compromise a patent process at Gypsum company, but will consolidate her position as the chief accountant. Means what will happen? Like if she discloses this patent about what she knew about the previous company, in that company she'll be having some problem with the patent because she has compromised. Means she was not supposed to leak that patent. But for me, it will be a good thing. So I'll like say, "Arey, you are getting like the best. You are consolidating a position." Means you are making some positions worth very well. Okay, cool. When she left the employment of the company, when she left the employment of a previous employer, she signed a confidential agreement. She has already signed. Matlab, she is not going to leak the things. Okay. But the clause were never clear about or specific about what information she should share and to whom. So it's like she signed the contract, but she was not knowing what the things she should say and what the things she should keep it confidential. So maybe she wants to take the advantages or disadvantages of what the stuff is. So considering all the stuffs, we need to keep in your mind like what things needs to be eventually shared and what needs to be confidential. So Mrs. Pleasant has a significant knowledge of the blockchain technology. So yeah, she was having a knowledge. But the finance director, Mr. Frickling, has a limited knowledge of it or the new business model that my company was developing. So what happened? The chief accountant, what Miss Pleasant was, she was well equipped with the knowledge. And my company's finance director was having no knowledge, but he says, I am very intelligent, I have all the knowledge. Are you mad, are you? So don't say anything about it. So my finance director has limited knowledge for its new business. Okay. But my finance director told that there is no need to spend more amount of time in technology. Why? Why will I not spend? So my finance director had told that there is no need to spend a significant amount of the time creating a technology to ethically source material. Miss Pleasant is worried because Miss Pleasant actually knows the scenario. Okay, it is not so easy and this mad is telling anything to be done. Okay, so Miss Pleasant is worried about the Fricklin's lack of intelligence and lack of legal knowledge. Yeah, because she is already knowing this stuff. Cool. As she feels that it will affect the development of the technology. In addition, some of the data concerning ethically sourced material has gone missing. Oh my god. Because you don't have knowledge, like half the information is very dangerous. Otherwise you don't have information, so you can hire somebody else with the information. Otherwise half the information is more dangerous because you will give some wrong information, creating a loss thereof. So yeah, because of the finance director's half knowledge, things were going missing. And my Pleasant is feeling like she thinks that Franklin has erased the data. Oh. And sabotage the project. What's the meaning of SABOTAGE? Guys, what's the meaning of SABTOGE? Yeah, what's the meaning, guys? Do you know? It's something like they have destroyed or he has damaged the things. Means he has, by his intention, maybe like stuffed the things. Okay, so he feels so. Yeah, so we need to know whether he has eventually did this or maybe he's just feeling that way. Let's go and understand further. So they have told, Mr. Franklin has told the board of the directors that he has in-depth knowledge of the technology. Okay. So basically he's very intelligent, Franklin. Yeah, we are getting to know with us knowledge. Cool, chalo. So they have asked us question. What's the question that they have framed us? Discuss the ethical issues raised by the implementation of the technology for both that Miss Pleasant also and the intelligent finance director also, and what are the actions that they are going to take it because the issue has been raised. So yeah, if I want to present the answer, first of all, what am I feeling? Is Miss Pleasant going to leak the information? Is it fine for her? Because she has made the contract, but eventually she don't know about the contract, the terms are not clear. That is also an ambiguous thing, but still to release things, it's very difficult. Okay, so over here Miss Pleasant is basically in the difficult position, yeah, as regards because she has got the information from her previous employer, right? She has already gained, yeah, the information from her previous employer. So maybe if she is doing it, she is not she has some contractual obligations, like she has to maintain some confidentiality also. So if you read it, guys, I have just presented it. Yeah, in general she should respect what the confidentiality of the information acquired, because there is a relationship between professional and business, so it's better not to disclose any third party's information without proper authority. Yeah, we know. In addition to this, she should not use the information of her personal advantages also. Why personal advantage? If she is knowing about the technology, if she tells about the company, see, I am very intelligent, maybe her position in the company will be raised. Yeah, so for the personal information she should not say. So what do you mean, ma'am, if I know something, so I should not say anything? See, my knowledge, if I can generate it, it's better, but at position where it is required, if there is a contract, needs to be very careful. However, the situation will depend upon the nature of confidentiality, right? And over here, is the agreement very clear, ma'am? The agreement is also very not clear also. It's about getting not so clarity, right? So this situation will depend upon the nature of the confidentiality agreement. But over here, the agreement is also not clear, right? The agreement may have been made in order to protect commercially sensitive information. Maybe that can be prevented, like not to share with the new company. However, if the agreement is not clear and specific, then what? Then it is nothing but it is left upon the ethical conscience of what the person should disclose and what not disclose. Okay, so it's upon the judgment, the individual person's party is thinking, like, is it so much sensitive? Like all the stuff. Okay, the purpose of the agreement is to prevent to prevent the disclosure of the sensitive information. So we have to understand it. Whether we should disclose it or not depends upon what the ethical conscience we originally have it. But over here, what about the other party? So opportunities and the challenges presented over here, we have to understand that. Opportunities and challenges presented by the technology and the new business model require someone to be intelligent. Yeah. So intelligent in what stuff? So he should be digitally literate. He should not be like mad person who don't know anything and says about my own competencies are very good. So yeah, even that counts very well. Yeah. So it says over here, the accountant should provide relevant and the decision useful analysis to ensure that the right technology has been adopted. New business model presents, it requires some good knowledge. So this development is going to be at a position of getting up a competencies, and these competencies relates not only for the financial matters but also for the technical aspects also about the techniques. So that Mr. Franklin was having so much of data, yes or no? I don't think that he was having so much of data in depth, but still he just told a lot of lies, right? So Mr. Frank, or whatever his name is obviously not aware of the importance of the entity, yeah, being in the atmosphere, correct? So professionally, accountant needs to expand their competency areas. We know it should be aware about the digital and the social things also. So what he lacked as per the ethical issues, so you can say, ma'am, professional competency and due care he didn't exercised. Yes, so he lacked the stuffs. A professional accountant should not intentionally mislead, but what he did, he intentionally misled. So it's been understood, like maybe because of the lack of expertise and all, so he misled it. Yeah, what he did, that erased something and etc. So yeah, that is again not good. So what is my final conclusion? What the person should give is, so Miss Pleasant, my new the chief accountant, is in the difficulty position because no matter she is competent, but she know that there is some mistake happened in the project. Yeah, this can be an act of whistleblowing. Yeah, you know what is whistleblowing? They're just informing things without being understood, like, okay, this is the one who is giving the information. Yeah, like I want to say about, I want to complain about someone, but again I don't want my name to come up. Yeah, so it is because of this. So over here, this is an act of whistleblowing, can cause a conflict between an interest between the person and the organization for sure. This conflict from some away stems from some away the whistleblower is viewed. So the chief accountant could be viewed as someone who is sharing the information of the misconduct happening to the superior who is acting as disloyal for someone. But I think Miss Pleasant will be torn between the loyalty and etc. As long as her motivations are sound and she is confident about the system, she should not hesitate on relying upon the information, and she should say whatever she feels true, and she has to give the information to the best of her knowledge, considering the ethics into the main present. Okay, is it fine? Is it fine? It's all about like how good you can interpret whatever the stuff you know. So over here, when it is ethics, it is not going to come up with the single answer. Yeah, it's upon you guys, but you know that PCOP word needs to be written. Yeah, professional competency, P, I, integrity, C, competency over here, then O, the objectivity, and P, the professional behavior. So that needs to be there. So that answer needs to be presented in the answer. Okay, students. So with these over here, we have completed 2 questions with less than 2 hours also. So I hope we understood it. Yeah, I'm just waiting for the chat, and maybe then we can take up a break for some time, and then we can resume it for the 3rd and 4th question. Yeah, I'm just checking it up. Yeah, I think it's clear. Yeah, okay. Okay, yeah, cool. So if you want, we can continue with the 3rd question also. Just give me 1 minute because Just give me 1 minute. So yeah, we can just continue with the third question. I'm feeling like why to take a break. No, I don't want to say the answer for sure. Now let's go ahead with the third question. Question number 3. About yeah, this is also the easy question. Yeah, I know. I have always said my students that question number 1 becomes maybe difficult, but question number 2 okay, 3, 4 are very easy. 3, 4 are very easy. Yeah, can we go ahead with the question number 3? Yeah, try to read it. Try to read it. Okay. So basically, there is a company, company. Okay, first of all, read whatever they have asked us. So if you can read the first question, what's the requirement? Okay, it's a big requirement. So yeah, discuss whether the 4-year software contract with the company is a single performer. Okay, so basically there is some 4 years contract. Now let's read it. I'll just make the solution over here. Discuss whether the 4 years software contract, okay, so there is basically a software contract with the company, with the sent company, is it a single performance obligation? So what was single performance obligation? Yeah, students, you know what is IFRS 15? First of all, I need to identify the contract with the customer. Yeah, if there is a contract with the customer, then we have to see how much promises the company has made that they are going to satisfy it, right? If there are more than one obligations, that the company is going to satisfy it. Students, for this I have uploaded it in the it's in the YouTube. And guys, I'm telling you, in any paper you check, like any damn paper you check, you get IFRS 15 in your paper. Like, I'm betting you it's there in your paper, so you just cannot avoid it. So if it's SPOs, right, I have to see the hierarchy. First, contract hai, yeah, contract is there. Then obligations, how many obligations? Then transaction price, allocate them, and then book. So it's SPOs. If the customer can benefit on its own, like I have given you an example, if you remember, mobile plus charger plus warranty, like it's an iPhone. You can take mobile, you can take charger, you can take warranty. It's at the option of the buyer. Then these are the obligations which are different. But if it is compulsory, with mobile you have to check the charger also. It's one obligation. I'm not going into details. You can see it in the video. Yeah. Discuss whether the 4-year software contract, is it a single obligation accordance with IFRS 15 with the customers, including how the revenue from the customer is to be booked. Okay, in December 2027. Show your answer. What revenue? Okay, your answer should also include whether it is the last thing at the point in time. Can you book the revenue today itself or over the 4 years period? Okay, this becomes my first question. So what they have given in the first liner, the company, Sitka company, is a software development company which develops software. Which operates in an industry where the technologies changes rapidly. Okay, so whatever the technologies are today, maybe tomorrow outdated. Okay, its customers uses the cloud to access its cloud. So okay, the cloud system, whatever they want to access the data, they put it in the cloud. So cloud computing type thing. And to access the software, and the company generates revenue by charging customers for software license and software updates. So for two things is charge, software license and software updates. It has recently disposed of an interest. Okay, so they were having a interest in subsidiary. Okay, so they were having a subsidiary which they just now disposed of. It recently disposed of an interest in subsidiary, the Marlet company, and purchased a controlling interest in billing company. Okay, billing company, controlling interest. So maybe now that will be my subsidiary on which I have a control. Okay, let's see what happened in the year end. For the first thing, we'll keep it simple. Software contract and updates. Explain the contract to license the software and related services. So initially, the customer, they are giving services like they are selling up, charging for the software license and software updates. So let's just read it. We'll be keeping it very simple. Okay. On 1st Jan 2027, the company agreed a 4 years contract with the sent company. I am Sitka company. I have agreed with the sent company कि चलो बाबा for 4 years we will do it, to provide an access to license software including customer support in the form of monthly updates. Okay. The total contract price is $3 for both the license and the software, for licensing the software and monthly updates. So update and license, for both they charge 3 millions. Should I charge this 3 millions today itself in my books of accounts? Let's see. Shitka license over here. If I see in the market, if I sell alone, you remember if there is something which is merged. So if I get the standalone selling price, this is something which I have did it. So you have to bifurcate, like 1 plus 1, it is free. Pay for 1, you get 2 things. But in my books of accounts, I just cannot write it for 1. I have to bifurcate it for both, right? Yes. So the Shitka company, if he sells alone the software, I charge $. Like, okay, just imagine. Shitka company's licenses the software on the standalone prices between 1 million and 2 million over a period of a year. Regularly sells the monthly updates. Okay, so they regularly sells the monthly updates separately for 2.5 millions over the period of a year. Okay, the software can function on its own without any updates. Okay. So it's not required that you should purchase software compulsory. Like, it's not required that without software, like the software can function. Okay, although the monthly updates improves its effectiveness. So if you don't even do the updates, it will work. But if you update it, things will work more smoothly. So they are not essentially to be functional. However, because of the rapid changing, people would want to understand, like, if Cent company does not update it, the benefits of using the software will be reduced, obviously. So see, what are they saying? Without update, the things will not work. It's not that. But yeah, for being updated, they need to, like, for being properly working, they need to have just updates. Simple. In the year ended on 31st December 2007, the Cent has only updated the softwares on 2 occasions. Okay, so for 2 times they have updated. Only updated the software on 2 occasions. When the Cent company, okay, just understand, the next company, the former company, must access the software via cloud and does not have the own rights to softwares. Okay, so a lot of stuff has been given in the question. So now it's my understanding that how I need to, like, present my answer. Okay, how I need to present my answer. So using their stuff. So what's the first question that they have asked us? Now we'll just go towards the question. Yeah, and there is some another question also for that only. But yeah, we are just going to go ahead with the first questions. Yeah, just give me a minute. Okay, you are in the position to see this? Yeah. Cool. Okay, yeah, this is the question. Yeah. Okay, it's getting up dumb like that way. Okay. The first question says, discuss whether, yeah, because we have something else also for the second question. A is second part, but we have to discuss it for the first part right now. Discuss whether the 4 years contract over here, is it a single performance obligation? Like, how will you recognize the revenue? Okay, how will you recognize the revenue? Okay, and you should account it over the period of time or at a point in time. So right now, if I start developing my answer, what am I thinking? What should I do? Should I do it today itself? So first of all, we have to understand which is this IFRS. So IFRS 15 says that revenue from customers contract is something like we have to make a promise. It's basically a state of the goods and the services which I have to provide it. It needs to be what? It needs to be distinct for the customer. Means the customer should be able, the position to purchase and sell on its own. Like, to purchase on its own, not sale. Purchase. Means they should not be like compulsory. You have to purchase it from my company only. Like both the things together. No, it's not that way. Okay. So that shows how can I book. So basically, if I start producing the answer, it's that. So IFRS 15 says that revenue from contracts with customers states that the goods and the services which are promised to the customer needs to be distinct. This word should come if these criteria are met. Means, can the customer benefits on its own? Yeah, if they can benefit on its own and the entity has promised, okay Baba, both the things I will give you separately, then it is different. If it is combined, it is one. That is, both these conditions should be satisfied. Yeah, both these conditions needs to be satisfied. That is, can the customer benefit the things from its own? Yes. Can the customer benefit the goods either on its own or together with other resources? And whether the entity has promised, कि bhai, I will separately promise you for the different thing. If it's all different, then it's different. Otherwise, it's a combination. Easy, simple. Over here, if you see the updates of the company over here, yeah, if you see the updates, Are they compulsory? No, but the updates are integral part because it is for 4 years and the entity knows that it is in a rapidly changing atmosphere. So it's better to have an update properly, right? The determination of whether the license over here, the determination of whether the license and updates are separate obligation requires a judgment. So we need to know these things. License is what I am selling and the updates. Is it compulsory? If I am selling the license, you have to take the updates also. So in case the updates improves the effectiveness of the software, like it is not like okay, without being update you will not be in the position to work only. No ma'am, it's not that way. It's just going to improve the effectiveness. It's just going to improve the effectiveness, right? Yeah, so read it. In the case update improves the effectiveness of the software without being essential, right? It's not compulsory. However, for the updates it needs to be combined with the license. They should fundamentally change the functions. Although the software can function on its own, the benefits of softwares, see whatever they have written, they have copied the question as it is, right? So over here, what am I supposed to do? So they have written it over here that, however, my company should consider not only the frequency but also whether the company accepts the updates. So you are going to sell, it's okay. But are they going to take the updates? The updates are made available every month, but the company updates only 2 times, right? It was written. So what are they doing? They are not even occupying the things properly. Only 2 times. To conclude over here, what do you think? What's better? What's better? To conclude, the benefit with the next company, they could obtain the license over the period of 4 years without the updates would be significantly reduced. I don't think so. The contract to grant the license and to provide the updates in itself, in effect, a single promise to deliver the combined thing to my company as sent company over here, as my next company over here, as sent company stimulately receives and consumes the benefit. Because over here it is going to be like not just once. He is not going to just get it for once. He want to use it for like 4 years, right? If you want to like use it for 4 years, so first of all it is true that he has to book the income as over the period of 4 years. As contract, it is a single promise that the revenue of 3 millions will be allocated over 4 years. Yeah, it is allocated over 4 years. My company has to disclose the method how am I going to record it. Considering the financial statements means it should not and cannot allocate this 2.5 to monthly updates and the residual to the software. So it will not be faithful. Why? Because what they have given up in the question, if you read it, directly 2.5 they'll put it for the updates and out of 3 millions whatever is remaining they will put it for the license software. No, it will not be proper because I'm having a different standalone selling price, and it is not going to get reflected. So yes, this is the way I have to write it, the answer. Clear? Yeah, you fine with it? Yes. Okay, now we need to go ahead and read the second question. Discuss briefly why the rights to receive the access of the software is not proper to be accounted for as intangible assets or a lease. Okay, let's read what they have asked us in the question for sure. Yeah, let me read it. Where is the question? Okay. Yeah, so basically they have asked us, the sent company is going to pay for some access of use in software. So what do you think when it is software? Yeah, is it something tangible asset? No. So you will say, ma'am, softwares are intangible asset. So do they have to apply for IS 38? So yeah, when you just see about the software, there is a word, yeah, where it's an identifiable asset. You just cannot touch and see that way. Just give me a minute. So sent company over here, if you can see the answer. So over here now, it's very simple things which is given, but it is our intelligence that we have to take up the questions. Like, okay, if it is an intangible asset, so my mind should work, okay, that they may be hitting to IS 38. So that way I need to start formulating my solutions. So over here, my company pays a fees to accept the use of the license, okay? And over here IS 38 comes into picture, which says when it is IS 38, you have to just write the definition of intangibles. So what's its intangibles means? Okay, I should have the asset which is identifiable, means which is separately purchased, and say along with that I should get the all economic benefits out of it. Yes. So over here, and again the entity should have the control over the asset, right? So identifiable asset are identifiable, intangible assets are identifiable, control over the resources, and the existence of economic benefit. So this needs to be considered when determining whether the intangible asset is created or not, yes or no. The current arrangement with that company is likely to satisfy the identifiability and existing contract for sure. But it is a question whether it should be considered as per IS 38 or not. So IS 38 states that an entity should have the control and have the future economic benefits. But over here, you see, sent company, do they have the rights? So they does not even have the rights also anytime. So it's not proper to record it, right? So they cannot record it as per intangibles for sure. And even this contract is not as per lease also. Is there any lease? Catch for 4 years you are going to take it. It's an ROU asset. No, it's not an asset. It's not an asset. It's just for them an expenditure. So how will they record? So the sent company should not record as per intangible assets for sure, as they don't control. Even it is not a lease, because the leases does not have over here, the sent company do not have the right, like whatever time I want to use it for 4 years I will use it, etc, etc. So no, it's not even that. So at 1st Jan, the contract gives the sent company only the right to receive the access in the future. Therefore it's a service contract. So it's a service contract. This word is very important. So it's not even leases, it's not even IS 38, it's not even as per IS 38 also. It's just as per the service contract, means you get the access to use it, because the sent company who is actually having the right, okay, just I got the updates, it's not something like I'm having the right, I will only book it as per asset about the software. No, it's not that. Okay, clear? I hope you understood this answer. It's very simple, very simple. So I'll not be taking up more time in that. Okay, now we have a concept which we have to go ahead with. Okay, we'll just read the question. Yeah, we'll just come up with the question. Yeah, okay. So yeah, it's this. Discuss and demonstrate. Okay, we have to understand it. Discuss and demonstrate how the disposal of 45% of the interest, 45% if I'm selling it, disposal, and just keeping up with me 15% each. Okay, discuss and demonstrate how disposal of 45% of the interest and retained interest of 15% in Marlet company should be accounted in separate financial statement of my company as on the date of the disposal. So if I'm saying you a very simple thing, you must be knowing at your own also, I know for sure. Yeah, students, what's that? Ma'am, if I am having a right of, let's say, if I have purchased or if I have invested as an university in some company which is more than 50%, that other company is my subsidiary, sure. If I have invested less than 50% but more than 20, it is my associate. But what if it is less than 20 also? It's my normal investment on which I have to book as per IFRS 9 as my normal investments, right? So this is what the concept we know. Now let's see what have they asked us in the question. Yeah, we'll be very slow. About the part disposal. It's not like 100% sale. Okay, yeah, we'll read it. With the question, I'm feeling like you want to keep, let's say, 15% and 45% you would have disposed. So maybe he'll be having a control prior 60%. When it was 60%, maybe it will be subsidiary. Now by selling 45%, now I think it is not even the associate. Let's read it. I'm not making any assumptions. Yeah, let's read it. So the Sitka company prepares a separate financial statements in accordance with IS 27 as SFS. Okay, so they want to prepare a separate financial statements. Yeah, cool. At 31st December 2007, it held, just see the dates, 31st December 2006. It hold 60% of the interest in Marlet company and accounted Marlet company a subsidiary. Okay, on 31st December you did this stuff. In its separate financial statements, see, we have to make two, we have to prepare our own statement, that is for sure, and then we have to consolidate it. Okay, so SFS is to be made as per IS 27. Yes, In the separate financial statements, my company has elected to measure its investment in Marlet using equity method. Acha, you thought of showing as per equity and not as per the consolidated. Okay, let's see. Okay, so as per IS 28 they showed on 1st July 2007, on 1st July. Okay, let's see what is the date. Like in the current year, let's say after 6 months, the company disposed of 45% of the equity interest in Marlet. Okay, so 45% is sold. So out of 60, 45 gone. So I'll be left over with only 50. Okay, only 15. So yeah. And they have sold 45% for $10 millions and the loss to the control. Obviously, I'll get this much of cash and it's gone. Okay. At the date of disposal, the carrying amount of the separate financial assets over your statement was, means you have to see now what's the net assets. Okay, so they have told the carrying amount of the Marlet's companies SFS was 12 millions, and after the partial disposal, because now I'm still having 15%. Sure? Yes. After the partial disposal also, my company does not have joint control. From where will I have joint control? 50% thodi hai. Not even significant control. Now I don't have more than 20% each. Because I have only 15% left over, which I have to book as a normal investments. Very simple. Very simple. Nothing in that. At 1st Jan 20x, on 1st July, on that date, the fair value of the 15% interest was $3.5 million. So yeah, they have given up 3.5 millions. Okay. My company wishes to recognize any profits on the disposal to OCI. In OCI. So you want to record in OCI. Let's see. Can you record it in OCI or not? So we have to start writing the answer, which is very, very simple, which will like hardly take time. So do you think like, can I book it in OCI? So first of all, just imagine, what did you got? So on the date of sale of 45%, I got 10 millions. Agreed? So yeah, I got 10 millions. Along with that, you are saying, Kecha, you want to record it for 3.5. So that 45% sale will be 10 millions. I'm getting it. And for 15% it is 4.5. And what are the assets? The carrying value of the asset is 12. Oh, so is it a profit or loss? It's a profit, ma'am. It's a profit of 1.5. Okay. So it's just that we have to write it. Simply. So I have to mention whatever the statements are. Okay. Please guys, try to understand. It is very, very simple. Like it's a cash marks for us. Like this question too, I really want guys कि वो आना चाहिए in the examination. So it says, IS 27 says separate financial statements, which requires an entity to prepare separate financial statements. It is any of the entity. It's okay. You have to prepare. How? Either it can be at a cost or as per IFRS 9. That is financial instrument. Or you can even measure it as per how. You remember, na? Separate financial statements, how I have to measure. I have explained you in the class. It can be as per IFRS 9, it can be as per cost, or it can be as per investment in joint venture IS 28. It can be any which ways. Whatever is more relevant. Over here, when you say after the subsidiary has been sold, after you have sold, like for example, right now, day 1, it was having, let's say, 60%. So it was basically the subsidiary. On 1/7/2000 and some X year, they have sold 45%. Means now left over with only how much? Now left with only 15%. Means it is not even more than 20 to 50% to be called as associate, right? Not that much also. If it's like more than 50%, definitely it would be understood as subsidiary. Even it is not that too. Neither it is 50% also to be called as joint venture. Not even joint venture. So what it is? It is normal investment. Normal investment, which I have to record it as per how much? As per IFRS 9 you have to record it. Okay, this is what I just mentioned it. A small para. Yeah, just that way. I have mentioned it. Whatever I feel, I have just returned it. And now we have to formulate it in proper way. Okay, over here, yeah, students, just try to analyze it. Okay, just give me a minute. Mine are actually hand is paining a lot. Left hand, yeah. Like I have it's very bad right now. I'll just try to read it. After the partial disposal, my company is what now? That Malit company is now not a joint venture, not a subsidiary, not an associate, but yeah, it's a normal investments, right? Therefore, IFRS 9 is to be considered, okay? And if it's an investments, yeah, if you remember, if it's an investment in equity, if I have investment in equity, I have an option. Either I can record it as a fair value through P&L account or OCI. But if you choose OCI, it is what? It is an irrevocable option. You have to choose as per OCI. You have to always record as per OCI. If you don't remember, check IFRS 9. You will definitely understand we have did all this stuff. So if it's an investment in equity, it's an irrevocable option if you choose to record it as per OCI. Yes, as per OCI. Any changes through OCI? Yes, because you will say, ma'am, P&L calls me, but I'll say, okay, no, I have not even choose for the trading account also. No, I am not even for trading also. Neither this is not my business also. So why will I book in P&L account any change? So it's okay, we can book it in OCI. Yeah. So what was the situation in the question? The company has made an election on 1st July 2007. So okay, I feel now I cannot record. I have to seize it basically. I have to seize it. So what will be the amount, guys, at the time of seizing? So on this date, IS 28 says that basically now it is not even your associate, it's not even your joint ventures also. So how will you record it? So yeah, I have to find out the difference of profit and loss. So on the date of disposal, guys, on the date of disposal, let's say, what was the fair value of the company? Yeah, guys, I have already analyzed you. The carrying value of the company was, if you want, I'll just show you. Yeah, on the date of disposal, they have given up the question like 60% they have sold. Yeah, and on the date the carrying amount was 12. Okay, the 45% what you sold, you got a cash of 10 millions. Yeah, and the remaining 50% value was 3.5. Okay. Yeah, so carrying value at the date of disposal was how much, guys? Yeah, was it 12? Yeah, and that 45% what I sold, I got a cash, received cash 10. Yeah, plus I am having like 15% still, whose value I am getting it over 3.5. Is it something more? Yeah, ma'am, obviously more, ma'am, obviously more. 3.5. So it's excess of how much? So it's an excess profit of $1.5 millions, right? So yeah, that is what we have to show. Yeah, so cool. Just try to read it. Yeah. So therefore, the company is going to make a profit of 1.5. Sure, ma'am. Sure, they are going to make a profit of 1.5. And these apply regardless of whether you present it in OCI or whatever you want to do it. Okay. The company has to only present the difference in OCI which is substantial to change. Such difference is not a result of change in the fair value and all. So the difference over here can be directly put in the P&L account, because it is not that initially it was IS 28 and now it has come to IFRS 9. So if it was IFRS 9, then only you can book it, otherwise not required. Not required. Clear? So yeah, we can just go ahead and read the next question. So the last question they have written, please discuss, it's just for 4 marker. Discuss how the two assets, okay, acquired on the acquisition of the building should be valued as per IFRS 13. Okay, so as per IFRS 13, what is the situation? So yeah, they have booked over here IFRS 13 as a fair value measurement. So it's a fair value measurement, it's a clear-cut situation that you have to check the value in the market, which is something known as fair value as per IFRS 13. So you see, do you get the market made proper value? Is it something like if you sell the asset, you get some price? If you book a liability, do you get some price? That way, cool. So yeah, without any further delay, I will just read it. So question number 3. Acquisition of billing company over here provides information about the fair value of the two assets acquired in the business combination with billing company. Okay. It's acquisition of billing company. Cool. And they have acquired two assets. So for the two assets, maybe I have to figure out some fair value. Yeah. Let's write that. Okay. So acquisition of billing company. Okay. Just that way. My company, Shitka company, has acquired two assets in the business combination with billing company. Okay. The first asset is QBooks, which is basically the accounting system which makes the bills. Yeah. So like QuickBooks and also it's QuickBooks. QBooks. So they have purchased first of all the asset of QBooks, a system which has helped them to make the billing for their use. Okay. For the use, and the second asset which, okay, so just read it clearly. The first asset is QBooks, which is an accounting system developed by billing company for the use, with the second asset which is a best cloud software. So basically they have purchased two things, that is QBooks and cloud software. The directors of the company believe that the fair value of the asset is higher if valued together rather than individually. If I combine this, the value will be higher. The fair value will be higher. If the assets were sold, just see. If the assets was to be sold, these two types of buyers will be interested in purchasing the assets. Hence, if I have acquired in the time of business combination, what will be the value I will record it? So fair value is to be recorded as per IFRS 13. But when you acquire a company, you need to know what will be the value, right? So I have taken up these things, QBooks and Best Clouds. If I am having the assets like I have acquired, and if I sell it in the market, if I sell both, I get better. So one of the buyer group would be those who operate in the same industry and have the similar assets. So maybe similar industry, I can get the value more easily, right? I can compare it. So this group of buyer would eventually replace the QBooks with their own system, which would enhance the value of the asset. The fair value of the individual assets in the industry buyer would be 30 millions for QBook and 200 millions as the Best Clouds. Therefore, it's 230. Means if in the similar industry, if I just want to sell it, I get 30 and 200 as the value for that asset. Now I need to know, if you remember IFRS 13, there is a concept like if something is easily available in the market, and if it's a principal market, we get that. Otherwise, it's not, we get the most advantageous market. Along with that, we have some valuation techniques also. Yeah. Before that, we have to know if I'm getting any quoted price. If yes, we can go ahead. If I don't have quoted price, I need to know in the similar industry, are there any same assets? If yes, I can see that. Not even that, then maybe I can see the replacement price. So whatever is the best available value, we have to book on that. Okay, clear? So that becomes the fair value of the asset. Okay. So what they have written, another type of buyer. So basically there are two types of buyer. If I sell both the stuff, I can get 230. Yes. Another type of buyer is a financial investor who do not have been substitute asset for the QuickBooks. So they would license QuickBooks for the remaining life and commercialize it. So what they would want, so they indicated that the fair value of the QBooks and the Best Cloud would be 50 and 150, that is only 200. So okay, so basically there are two types of people, right? Okay. So now I have to understand like what will be exactly the value at which I will record my both the assets. So what have they asked us? Discuss how the value of both the assets to be recorded as per IFRS 13. So yeah, first of all, now we have to just update them. Okay, like how will I record it? Okay, so IFRS 13, yeah, it's very simple. It's very simple. I have just put on the answer over here. So yeah, just try to understand. IFRS 13 says that IFRS 13 fair value states that what is the fair value if you sell the asset today or if you settle the liability today itself. Okay, so that is the meaning of IFRS 13. Okay, however, IFRS 13 says that it should be, I told you, best and the highest use of the asset. Okay, that you should get the value should be best. So the fair value of the two assets would be based on the use of the asset within which the buyer group is interested. So the fair value which I get was 230, if you remember from the first party. So the fair value of the asset of the group was 230, which is higher. So yeah, simple, it's clear, it's visible. So 230 is higher than the group of the financial investor, which was 200. So it's better to go there, right? The use of the asset in the industry buyer does not maximizes the value of the asset individually. But if I'm taking up the group, it is more. So yeah, we can consider that also. Clear? Yeah, are you getting it? Simple? Yes. So yeah, with these we have also completed the question number 3, which is pretty easy. Yeah, I would want you all to like see question number 4 also. But yeah, for the meantime, I think like we are at a position where we have done a lot of concepts. So yeah, it's okay. We'll just take a break of 5 minutes and we'll resume it back soon. Yeah. Yeah, hello. So yeah, I'm just back after my lunch. So yes, yeah, you all are back. I'm just figuring with the chats. Yeah. So now the very less questions and the very less concepts are pending. Only just like last one question is pending. So I'm just first of all wondering for the chats and मैं एक बार chats को reply करती हूँ and then yeah we'll just see. Yeah, go ahead with the question. So yeah, I just had a chat from Rahul. So yeah, basically now, yeah. So the first question was from consolidation is the paper. Yeah, because I'm doing the paper solution. Na? Yeah. So in the last question, I did it exactly what the questions can come up in the upcoming exam, and these are all the some small transactions. Yeah, like hi Gagan, hello, hi Rahul, hi Sukanya ma'am. Yeah, I just heard like there are two right now, so yeah, it's okay. I think Sukanya ma'am is there. So yeah. I think yeah we can just start it with the question number 4 and yeah we'll wrap up for sure. And yeah, by the end now we are going to discuss like how are we going to do the papers, and that is gonna be the most important thing which I want you all to attend. Yeah, cool. Like okay, hi. Come on. Yeah, we'll be doing the last question. Yes, ready for the last question, and the last question for the SBR revision. Yes, students. Yes. And after this, we are done with the revision series also. Yeah, so we have constantly taken it for a good like concepts and a good time. Okay, I'll start it. Okay, again, my favorite thing always to be done is read from the last. What are the requirements? So yeah, if you see the requirements will be very easy when it is the last question, but when it is last question now, there is a higher chances that you will be having a lot of questions. Hello, I'm here. Yeah, Sukanya ma'am, I know. Yeah, I think Rahul sir is also here. Gagan is also here. Okay, let's start. Okay, let's just start it. I thought like we'll not be doing the question number 4. Like I thought, okay, for 3 questions is enough. We'll do something else. Let's take up with the question number 4 also. Investors requirements are investors needs to understand a variety of factors when making an investment decisions. So if the company has to make some investment decisions, what are the factors they have to take care of in taking the investment decisions? Okay. The nature of the companies in which they are looking to invest is an important consideration. We know if I want to, let's say, invest in some company, I need to know the background of the company for sure. What is the financial capacity of the company? What is the growth? Okay, what is the reputation of the company, etc. etc. A lot of things needs to be required. As this is the need to incorporate the stability factor. What's the meaning of stability factor? Yeah, now it comes up to the word stability. Stability means I need to know if I am investing, how stable the company is, what is the economic growth, is it at a better position or it's going down. So all these there are certain issues and metrics which we have to take care into consideration. So yeah, if the company, yeah we know normally people will say, okay, ma'am, we have to invest in some stable industries whose so much of fluctuation is not there in the fair value. It's not something, yeah, the day one it is good, the day next day it is bad. No, it should not be that way. Why? Because we are not the people who will want to invest in short term and take the lot of risks. Yeah, so let's see what they have asked us. First, discuss why over here the sustainability becomes an important aspect of the investors analysis of any company. There is no requirement to refer to any exhibit. Why? It's just some random thing. Yeah, and over here when it goes like that way now, when answering a part A, okay, so over here I have to write it such a way that I get a professional marks also. So when it is a sustainability, let's go ahead and understand what's the meaning of sustainability. Okay, yeah, I am here. Okay, yeah. Okay, when I have to answer about sustainability, it's a clear cut situation that like it may be any company, it may be any investors. What is the first preference? Investors would want to get a good profit, right? They would want their better understanding of some company. So they would want to know which company is actually performing so much that not just to the society, it's not just to the company's owners, but even they are contributing something towards the society, towards the environment, and towards everyone, such that the person will feel if I invest in this company, my risks are reduced so that the person will be happy. Yeah. So it all depends upon the difference. It is going to differ between the different industry. Yeah. It is all time the different thing. Yeah. All sectors are different. everybody over here, we needs to know that if it's an investor, he has to know what type of products the company is preparing, what's the environmental issues the company is facing, what's the relationship. Means the investor has to completely have an overview of what the company is doing, what are the material factors which they have to take the decision considering, right? When we were very prior, like in the traditional terms, only the financial figures were enough. Okay, P&L, getting profit, yeah, best company, we'll invest it. Today, it's not that much, right? Today, it's not that much. Not just the financial figures will influence the mind of the readers, but even what are they doing is non-financially. Means what are the customers' feedback, what are they going to contribute towards the society. All those factors will also influence, okay? So if I want to write like this, getting good 6 marks, this is the way we have to write it, okay? I have already got this answer, so yeah, we'll just write it, okay? Okay, yeah, just need to frame the solution for the first. Yeah, it will hardly take a time because question number section 4 and all are very easy, very easy. So if you can see, sustainability has becoming increasing aspects today at the time of investing. Why? Why there is a growing recognition of sustainability, and they can significantly affect the company's financial positions. So investors are increasingly integrating consideration over the issues and the matrix into taking their decision making. So decision making is the most important thing, because of which I have to see the factors about the company also. Investors require better understanding of what the social and the environmental context. They would want both the phases to work properly in which the business operates. Because today, not just the financial figures will not decide the future of the company. This creates a great trust and creditability of the company, with which the investors have the trust, because they feel that okay, they have the reduced risk because they got word of correct information. If the company gets, or if the individual gets a lot of incorrect information, that will create in their mindset a chaos. Yeah, so maybe that will not be good in the long run position. Over here, I am not going fast, I am trying to go slow, because I know these are the concepts which you all know, right? It's just the things which we have to present it, okay? So investors have shown an appetite of the products which recognizes and reflects the relationship between their investments and social and economical conduct. Yeah, they want these words. Investor needs to completely understand the nature of the company. For example, if I am understanding, let's see, like many years back now, even if I don't know about the industry I was investing in, but what if I don't know about telecom industry and I want to invest in the telecom industry? Today it's not fine. If I don't know ABCD of the industry, it's not better. Today the investors are playing a smart game. Yeah. So they know if I am not aware of the industry, I will not jump into the industry, because I will not be in the position to take a proper decision that can be a sustainable factor for long run. So investor needs to completely understand the nature of the business in which they are looking to invest, and all the material things also. So they need to know whether there are material risks and opportunities. Yeah. So for example, if I am thinking like engaging in some electronic vehicles, so I know that in future there are a lot of opportunities. But if I'm telling to you about the LED TVs and all, no, there are no more opportunities. I think like the opportunity is max over. So considering the SWOT analysis will also help us. Our own strengths, weaknesses, and the market's opportunity and the threats will also interfere. We have to consider that into taking the long-term decisions. Considering that, students, we have to present it the way our financials are there. And over here, the importance, as I told you, for some company things becomes important, for other companies these things are not important. So materiality is also going to differ it from one industry to another industry. Like for example, the wastages becomes the common thing for everybody, okay? But if I'm talking to you about the network, okay, so you will be feeling a very hi-fi network and all, maybe not material for some normal industry, but if it's about a very high-tech industry, maybe all those functions can be there. Means for different, I have already explained you about the Reliance industry. Let's say if Reliance industry, let's say the theft of 1 lakh is not material, because it is not going to influence the mind of the readers. But if the theft happened in my company, that is obviously going to affect the mind of the readers. They'll feel maybe my company is not a secure place to invest in. Yeah, maybe. So the material also differs from sector to sector, industry to industry. Yes. So sustainability is often unique to the sector. This analysis can be helpful in deciding the factors about which the company is better. If the company is viewed poorly based on the sustainability, means it could lead to non-investment decision. If I feel that this company in the long run will not sustain, I should not invest in that. I should not block my funds in that, isn't it? The increasing availability of the data. How can I get the data about any company? See, today we know there are so much of ratings available on the online things. Oh my god, you get to know hell lot of financial statements and everything, you get it on the online basis also. Yeah, so if I study about it, I'll get to know the information. That's all. So yeah, these advances have been lead to the quantitative applications of sustainability, and companies need a greater knowledge and perspectives. Okay students, with this we have like completed the first answer, which was what? Like very simple, very system. It's just sustainable. Yeah, we can write anything, man. Yeah, it's very simple because we don't have any what we can say exhibits to read. So it's about the answer. Yeah, like these answers are something which are not pre-written. Okay, it's not an inclusive answer. It can be an like exhaustive thing. You can write on your own also. Like it's a 3-marker question. Let's see what it is. Discuss any effect, or sorry, discuss any event affecting the college company which might indicate that an impairment testing ought to be conducted. Okay, so it's giving me a hint. Like I have to test whether the company needs to be impaired or not. Maybe the internal, external factors. I told you, if I'm not well, I need to visit the doctors. When do I visit the doctors? Very frequent? No, ma'am. Only and only if I have symptoms. So maybe impairment testing could be hit on that. So maybe IS 36 concepts could be there. Okay. Yeah. So students, we have to frame like this. We have to make it bold and then we have to go ahead. So what is this Colette company? So we have to figure it. Now, till now, though, I have not even read the question, guys. So yeah, there is a situation to read the question now. Okay. So yeah, we'll read it slowly. Okay. My company, Colette company, it is manufacturing the aluminium products. Okay. And it operates in the region that has suffered a natural disaster in November 1st, 2007. If there is a natural disaster, we need to know whether the company's ability is to have a going concern assumption or not. Like, let's see. If it's a natural disaster, what is the thing? Okay, yeah, we are having a lot of... Okay. Yeah, what is the position of the company? So over here, there has been an increase in the opportunity cost. Okay, so they have returned operating cost, sorry. So there has been an increase in the cost as the company has to replace the regional supplier which are more costly, okay, with a more costly international supplier. Why? Maybe they want to replace normally from whom they are purchasing, they want to now substitute it and convert it into international suppliers. Fine. So what happened? The year ended on 31st December 2007. So before year ending, let's say 2 months prior, there was a natural disaster. Okay. The following exhibits are given on the left hand side, we know. First, about the non-current assets. See, if something happened like very bad, is it not giving me a hint that ma'am, your assets, whatever you have recorded, maybe a lot of things would have been destroyed? Yes ma'am, it's an indicator. It's an indicator your assets and all is gone for sure. So what have they asked us in the question? Let's read it. First, about the non-current assets. It provides information about the non-current assets which are destroyed by the natural disasters, including the effect of decommissioning on the power plant. Okay, fine. Second, they have asked us about other natural disasters consequences. Okay, other natural disaster consequences. In the first disaster, like in the first consequences, the assets are destroyed. Other things, what happened? It describes the potential cost of repairing the environmental damage. Yeah, if the things have been destroyed, what will it happen? Ma'am, if the things are destroyed, that never means my work is stopped. Maybe now I have to make the cost. I have to incur the cost to make the things good. Yeah, to make the restoration fine. Maybe some of the and the associated government compensation. Maybe my company is not well. Yeah, the position. Maybe government will feel pity on me. Maybe they can give some compensation like IS 20 government grants. Maybe there could be a situation like the nature of the hedge against the commodity prices. Maybe there could be some risks because of the changes in the prices. And last but not the least, insurance policy proceeds. Means if my company is being insured, so definitely I'll claim that. If I claim that, I'll be figuring, okay, like I should get some contingent asset, right? So all this stuffs can be a mixture. So yeah, without any delay, let's just read what they have asked us. So the following information is used to answer the question with response to options provided. Okay, so yeah, there are some small options. Yeah, just we'll read it. First over here, if it's a non-current assets, like I'll be having PPEs and all. Okay, as a result of natural disasters, we know definitely the value would have been down because it would have been destroyed for sure. What they have written, the share price of the company has declined as the significant amount of non-current asset was destroyed. If small thing also happens, the share price drops down very badly over here, the natural disaster has occurred. So definitely the price would have been gone down, including the manufacturing facility. In addition, the company has suffered the reputational damage also because of the resulting in the decline in the demand. Yeah. So maybe the natural disaster, people will feel, oh my god, the company's health is not so good. So maybe company would not be willing to purchase it from the company or whatever it is. In short, my demand is also gone down. Cool. Now what happened? And because it happens, it even happens if my assets are only like damaged, from where will I make the production, right? It is both the ways. Over here, the non-current assets of the company that were destroyed had a carrying amount of $250 millions on 31st October 2007 because the same went off on 1st November, the natural disaster occurred. So till the date my value was $250 million. Okay. And the fair value, okay, this was my carrying amount. In the books of accounts, you were having it at 250. And the fair value is given at 280 based on the independent appraisal shortly. Like if in my books of accounts it's 250 and if I would have sold in the market, I would have got 280. Okay, they have given. Let's read it first. In addition to that, the company over here, just read it, okay? In addition to that, the company determined that the power plant which have to be closed and decommissioned earlier than the previous expected, the remaining useful life of the power plant has reduced from 25 years to 8 years. Oh my god. The non-current assets are valued using the cost model. Okay. Just try to understand what they are asking. Just try to understand. First of all, the life has also been decreased. You thought like you will be decommissioning maybe sometime after some years. That has also reduced to 8 years. First I thought decommissioning will take like 25 years. Now it's 8 years. And the stuffs are given. Okay, let's read what they have given about the natural second consequences. There are a lot of things. It's about hedging. Okay, for hedging they have given something. For insurance proceeds they have given something. And over here about some other disasters like, okay, government is giving some compensation they have given us. So first of all, what have they asked us? If you read the question, in the third point, they have asked us about decommissioning also, environmental damage also, hedging also, and potential risk. So maybe in that I'll be using the third exhibit, or sorry, the second exhibit or whatever exhibit is there. Right now, discuss an events. Okay, discuss any events affecting the company that might have a hint to test for impairment testing. So guys, what do you think? What is my first test of impairment testing? Yeah. So we know, ma'am, wherever there is a trigger, that whatever assets you have recorded, you will not be at a position to get exactly that amount in the market because of some internal or external thing. Internally means, for example, if I was having any asset and it fall down, or maybe the things were as such that I can see it internally ki acha things went off. Because of that, your value of the asset in the books of accounts is more than what you can get in the market. So that is known as, okay, internal factors. What's external factors? If in the market I'm able to see because of significant changes in the environment, because of the significant changes in the technology, because of significant changes in the interest rate, we have a lot of changes. Okay. So what are we going to write it? If the company determines that the event of the natural disaster has impaired over here, has been impacted. See guys, it is so sure na. It would have triggered it, yaar. If it's gone, it would have triggered it. If the company determines that the event resulting from the natural disaster have triggered impairment indicators, external, internal, the impairment test should be done, right? Should be performed because for the respective assets or CGUs or whatever it is. Like if it is a single asset, to single assets, CGU couple of assets, the for all. Like in this instance, if I'm feeling, yeah, what are the hint in the question? What I'm getting? So the first thing you're getting is, okay, first of all, the natural disaster has occurred, resulting into less demand of the inventory. Yeah, ma'am, it's a resulting that the things have fallen down. Yeah. So what are the factors that you're getting it, guys? So in the instant, there is a decrease in the, yeah, there is a decrease in what? Yeah, so there is a decline in the customer demand. In the question it is given, because your reputation has gone down. Yes, this is the first hint which I'm getting it. Second, the share price of the company has also dropped down. Yeah, over here the share price has also gone down. It indicates what? You know, when we were doing about the questions about the indicators, it was significant changes. If I have returned some assets more, means I have considered my net assets more than actually what is my capitalization in the market. Even that is a hint. So over here that only happened now. Share price has declined. That means the share price has declined, which may indicate that the carrying amount of the net assets will be higher than the market. My students, you guys knows this, huh? You all know all the stuffs. I'm so pretty sure. Exactly. Now what happened? Are Baba, now what happened? Now regional supplier you are not purchasing. You're purchasing from the international one. Again more cost. Yo, more cost. Yeah, again more cost, ma'am. The question, what happened? Damage to manufacturing in the facility is a direct indicator. Why? Because increasing operating costs resulting from the replacement of the thing is an indirect indicator. It's an indirect indicator. Indicator, indirect, no, it's basically directly. So that shows what? That shows what? Over here we have to test for impairment testing. The increase in the cost is nothing other than a indicator that, okay, Baba, there will be some or the other ways. It's an indicator of the impairment testing to be done as per IS 36. So over here, if you are seeing above, impairment testing is definitely to be done. Definitely to be done. Okay. So as a result, what we have to do, guys, we have to check for impairment testing as per IS 36. So what we have to do, students, we have to now see the marks for the first. If it's only 3 marks, so I should not start writing. Okay, see, if you want to achieve marks, you can write that, Baba, there are 2 types of indicators, internal, external. Then you can just portray some internal indicators which are there and maybe external. Then you can combine from the question what are the hints that you are getting it, and you can elaborate. Easy? Yes, students, easy? Yeah, I'm just seeing the chats. Yeah, I think very easy, na? It's manageable. Yeah. Pretty easy, pretty easy. Yeah, cool. Chalo, we can go ahead. Yeah, we can go ahead with the further concepts. Yeah, just let me read. Now there are small things which we can do it right. Yeah, like that way only. Yeah, for that we have to read the second point. Okay. Yeah. So first about the natural disasters, about environmental damage and government compensation. So yeah, we know as per IS 20, if the government is given compensation, when should I record? Is there any restrictions they have put? Yeah, just I'm watching it over here. Yeah, are there any doubts? No, na? Yeah, I think no. Yeah, we can go ahead. Yeah. So if it's IS 20, we have to know, are there certain conditions attached? If conditions are attached, as and when the conditions are fulfilled, we'll record, right? That way. So yeah, let's read it. First, the company has in the past repaired minor environmental damages that it has caused, but it has never suffered such a huge disaster. Yeah, such a huge disaster was for them for the first time only. So there is no legal obligation for the company to repair and restore the damage, as it is the responsibility of the government. This is okay, Papa, the government will do. The government announced on 1st December when the natural disaster happened, okay, they will be giving a compensation of $50 million available for repairs and maintenance, etc., etc., etc. So we need to know that whatever government gives or whatever they announce, it should not be like election. You should have the guarantee, you should have the surety. Whatever they have said, you are going to get it for the first. Yes, pakki baat. You should get it, otherwise it's like waste. Okay. Now what happened? By 1st March 2008, so like it's on December 1st they announce. So like after 3 months on what they announced, when the financial statements were approved, the company had only received an acknowledgement of the application but not approval. Oh, what it is? Did they got the approval? Is it sure for them? Are they going to get the amount? Yes or no? So maybe that can also be a situation where we have to understand, as per IS 20, that the government has given a reasonable assurance. Is it so? Over here, the grant, whichever they are going to get it, is it something like receivable? Can they do it? So in this case, if I'm getting only the acknowledgement, means is there any assurance? It's no assurance. Is it confirmed, the application? No. Only acknowledgement of the application, but not approval. If no approval, it's not confirmed, ma'am. It's not confirmed. Then you cannot record it. If it's not confirmed, from where will you record it? No, ma'am. Not allowed. Okay. So, yeah. Easy. So, we have some hedging, etc. things. First, I'll read what the question is. Yeah. For the first, discuss the following things. In the first part, destruction of the non-current assets and the decommissioning of power plant. Then there is a government wala thing. Okay, yeah. We'll try to book this question. First, the destruction of the non-current assets and decommissioning of the power cost. So, who is going to like bear all those stuffs? And what is the destruction? If you see in the question, my NCA was what? My non-current asset was what? Yeah, so you'll say, ma'am, there was fair value also given. Fair value we never take, guys. We never take fair value. Was on the date of ending. So if you see the question over here, on the date of destruction, prior to that, my carrying amount was $250 million. Correct? Yeah. And I thought that like maybe it will be decommissioning cost I have to incur like after 25 years, but now it is reduced to 8 years because the plant has been over, and yeah, because of some destructions, now I may be in the position that I have to settle it early. So yeah, so what we have to write it, guys? We have to consider that the destruction of the NCA results what? If it's that, if I'm having an asset and if it is of no use, I have to de-recognize it, because now the recognition criteria are not fulfilled. They are not in the position to be recognized as an asset. So it's to be de-recognized. First thing what I have to do, I have to de-recognize the asset. Correct? Because now you will not have any future economic benefits. So NCA needs to be de-recognized for the first extent. Now, is it something you have to pay as a decommissioning cost? As regards the decommissioning cost, we have to pay. Is it a liability? Is it a liability which we have to pay? Yes. If it's a liability, which standard comes? Ma'am, it's a future liability. Can I book it as per the decommissioning cost as per IS 37? Yes, guys. As per IS 37, the decommissioning thing, the liability is to be booked as per the provisions and all on the date of commencement. But ma'am, what amount of liability and all? Similarly to IS 16, do you remember? When it was IS 16, International Accounting Standard 16, PPE, I used to add this cost. I used to estimate this cost. What will be my decommissioning cost? Book it to the present value and add it to the COA, right? Cost of an asset. So as per IS 16 over here, if you can see, it requires the initial cost of the investment like PPE, okay, to include an estimate. So to have to add it to the cost of a capital, that what will be the cost by the year end, I would have to do the dismantle. So what I would have did, guys, I would have brought it to the present value. So I would have taken the present value of the decommissioning cost over the 25 years. Now I don't have to do it over 25 years. Now I have to do it over 8 years because now it has reduced, guys, over here. Correct? So now it has been reduced. So what I have to do, guys, now this increases over here because now the remaining carrying amount is to be prospectively done in the following 8 years. That's all. Simple? Clear? Up next we have second question that was about the government revenue. Right now we understood that government grant. Second, the cost of repairing an environmental damage and the potential receipt of government. Arey Baba, it is not sure. You have not yet, guys, got the approval of anything. If I don't get any approval of the damage, means the government is not promising you. Can you book them as per IS 20? Like, okay, this is a government grant which I'm going to get it. Ma'am, it's not so assurance. Is it something like IS 20? Yeah. So basically, in the past, things, normal, minor things have happened. If you see the question, it was, yeah. I'll just put up the question right now over here. They have told, yeah, in the past now minor thing used to happen, but there was no legal obligation that they have to suffer all the stuff. Yeah, and there was not a responsibility of the government. They themselves were doing it. But now because of this major stuff, there is a responsibility of the government to pay us the compensation. And how much? Of 50 million, and that too on 1st December. They just acknowledged by the year end, but approval is not yet got. So it's not so sure now. If it's not sure, please don't book it. Yeah, so yeah, let's formulate the answer over here. And I'll ask you one more thing. Do you feel like, is it something like is it for you? Is it a legal obligation or constructive obligation for the company? Yeah, we'll read it first of all. The company in the past, we have read the question, is same. In the past, they have some right minor damages. They were doing it, yeah. And it was not the legal obligation. You remember one question I explained you? If I'm selling the mobiles and that to China phone, if it is getting damaged, it's my constructive obligation. My students knows. Without any legality, I do it my own. I make it things proper. So a constructive obligation is there, which will only result in recognition of provision. So I can book a provision of whatever practices I feel that it can be my expenditure in the upcoming future. So yeah, if there is an established pattern of the past practices, means the people are having the valid expectations that I normally do such a stuff. Cool. In this case, the entity has not indicated to any other parties that it will accept any responsibilities. Arey, to whom I have promised? No, it's my own responsibility towards myself only. So over here, as per IS 37, over here there is no obligation, therefore, like it's no obligation. And the company is not in any fault. Whether it's my obligation to restore all those stuff. See, it's my company for sure. But if it's something which is natural disaster, I'll ask government, please pay. It's not my responsibility. Over here, I am not responsible for any stuff. So what I'll do it over here. So over here, if you can see, IS 37 says, I only book the provision when, because of the past. It's not my obligation. It's not my obligation only. It's natural disasters, guys. Not because of me, the stuff have happened. So it's not at all my obligation. So over here, provisions I only book because in the past event I would have did some stuff because of which I have to pay, and it is probable. But over here, it does not even meet the definition of provision also, because it does not have any legal obligation nor constructive. And this is because of natural disasters. अब company क्या ही करेगी ना, natural disasters हो गया तो, if the company will do what if the natural disasters has happened? Yeah, so there is no obligations. Okay, it's basically the government who has to pay. And as per IS 20, my government is also very shana. It's very smart. But till the date they have not even approved. If we have not approved, it's not sure that I'm going to receive it. It's not sure. So as per IS 20, it says that the government approve. Okay, government grant when I recognize, it's sure. It's like not like the election grant. Arey aapko milne wala, you are going to get, and you never get it. So it should not be like that. Okay. So it states that the government grant is recognized only when they are reasonably certain, when they were reasonably assured that the entity will grant it based on whatever the conditions are stuffed. Okay. A grant receivable is a financial support. Okay, it's basically a financial support which the company gets. So my guys, students, you know na, if it's, yeah, you remember IS 20. मेरे बच्चे लोग को तो पता है, I know, everybody knows. Yeah, if I'm going to receive it, what I do? Ma'am, if I got it, I'll record it like, ma'am, bank account debit to DGG. Yeah, DGG. Every year, ma'am, PNL. यहाँ पे तो you have not received it only. So what? Bank credit, no credit. That way. A grant receivable is a financial support which I need to normally recognize as that income over the period which is receivable. In this case, company has received only acknowledgement. Is it sure? Therefore, no reasonable assurance is there. So it's better. It's not probable also. So it's important. Do not show it anything in the financial statement. Don't show anything. When you will get it, tab ki baat tab dekhenge. Right now, it's not relevant. Clear? Easy? Yeah. So we have completed over here also. Second question. Now just one or two questions, and yeah, we are done with the paper. Yeah. So the hedge. Okay. The hedge of the commodity price in the aluminium. And last, the potential issues. Okay, let's see. What's the hedging concepts? So when I say hedging, people will say, ma'am, IFRS 9, ma'am, it's very difficult at hedging. I told you. But see, if you have a doubt, do check the video we have. So yeah, hedge of the commodity price in aluminium. The company hedges commodity price risk in aluminium. Okay, so they want to hedge it. Why? Because hedging means like if I want to safeguard my like risk somewhere. Okay, but what over here happened was the company hedges the commodity price risk in aluminium, and such transactions were classified as high probable as per IFRS 9. However, the purchase which were considered highly probable before the natural disasters are no longer there, because after disaster the things will be are gone. Then what about highly probable? What are the high chances? So what it is, prior to disaster, the company has a commodity price risk, so whatever they would have made as per IFRS 9 for sure. But the purchase which were highly probable first are not there. That means what? The concepts of hedge over here, the company should follow a hedge accounting principle only till the date of natural disasters. Once it is gone, it is going to cease. As the forecast transaction is not there. So what we can do is, if there is any sort of like gains and losses which is kept aside in the hedging over here, or like whatever in the OCI, if I have kept it in the OCI, if there is any changes, we have to classify it. Yeah, as a reclassification, we can put it into P&L account. Like things happen. If I'm doing any hedging stuff, it does not get cancelled on and on. No, it takes time. And every time I have to check the fair value. And if I have kept anything in the OCI or maybe P&L account, I have to like consider कि ये खत्म हो गया. If it is khatam, it will go in P&L account. Clear? So yeah, like a big question, they have copied it. And yeah, this is the solution. Just I'll type it. Students, trust me, students, it's very easy. I'm putting it over here, the solution for hedging. Okay, for hedging. Okay, for hedging stuff. Okay, so company should follow the hedge accounting only up to the date of natural disasters, because once it is done, it needs to be ceased off. Ceased off means over it, as the forecast transactions are no longer, because the transactions will not be longer. So whatever, like for example, I'll be having some accumulated gains and losses now. If it is there in OCI or whatever it is, put in P&L account and matter. Please close the matter. That's all. Last, about the insurance claims. So if insurance claims and claims, so I think IS 37 hits about contingent assets. So I have not even read the question. So it's just our knowledge about the standards. So potential insurance policy proceeds, which I'll get it. Let's read it. And then we are going to complete the, it's going to complete, like I'm so happy. Okay, yeah, potential risks. Potential insurance policy proceeds. So the company's insurance policy provides a compensation for losses. Yeah, for example, we know if the company has incurred this all stuff, so definitely they want some insurance cover also. So over here, the insurance policy provides a compensation for losses based on the fair value of the non-current assets and temporary relocation cost. Okay, so I think like I'll get $2 million, and any revenue lost also. If I'm having any revenue losses in last 2 months, that is from November and December, I'll get that also. So at 31st December 20X7, it is not clear like which events and costs are covered in the insurance policies. So the company is not sure like what are the things that they are going to get it, and significant uncertainty is there whether they are going to get the money or not. Arey baba, if more than 50% chances are there that you are going to get it, only then disclose the contingent asset. And if you are virtually certain, 100% no, but 99% that you are going to get it, only then book an asset. Otherwise, do nothing. Because it's prudent. Unnecessarily, you cannot increase your assets. Yeah, it will not be in your position to increase, right? So over here, what they have written, and it is significantly uncertain also what will be the compensation. Before the financial statements are approved, it is probable that the insurance company claim for the loss of the NCA would be paid, but no further information is there about anything available for the insured losses. And the insurance policy does not cover the environmental damage, because It's a responsibility of the government. Arey, government will not be responsible. I don't know when will they pay. So they had told, acha, the government will be responsible. Don't come to me. Acha, okay, cool. So it's okay. So what it is, IS 37 does not permit the recognition of contingent asset in the financial statements. So we record where, directly we record where? In the disclosures. Only if it is virtually certain, yeah, we will record it. Guys, you know, if you are very good with the concepts also, now, if you are very good with the concepts, you are at a super advantages. You are at a very good advantage. You are at a very good advantages. Why? Because we have to start writing. We have to start writing basically from the points only. So insurance claim or proceeds. So what's that, guys? So over here, my IS 37, you know the number of more than that. So yeah, it's not compulsory, that you have to write the standards number for sure. So International Accounting Standard 37 does not allow the recognition of the contingent asset. No, not required. Because we just have to give the disclosure. Yeah, disclosure. Accordingly, an insurance recovery assets can be only recognized if it is determined that the entity is having a valid policy, and that too if the recoverability is what? Virtually certain. Only then book it as an asset, because once it is an like asset, okay, it is no longer a contingent asset. But if it is a contingent asset, then definitely it is to be shown where, yeah, I can show in my disclosures for sure. In this case, what happened? Yeah, if you can read the question, I'm just presenting it over here. Okay, yeah. As it appears probable, yeah, in the question it is given in this case, as it appears probable that the insurance claim will be there. For example, in the question they have given, yeah, the potential proceeds will be 280. How much I am getting it on the day one? Yeah, my asset was 250, but I'm getting a fair value of 280. But there will be no disclosure of the recovery related to relocation or the loss of the revenue, because it is not even virtual. And obviously, for the insurance which does not cover the responsibility of the government, for that too I can never ever record. So yes, this is what we are supposed to write it in the paper. And yes, with these we have completed the paper less than, like, I don't know how many hours, like 4, not even 4, 3.5 hours. Yeah, that's all. Not even 3.5 hours. It's like 3 hours and 10 minutes, I think. Yeah, I have just closed it up, and yeah. So yeah. With these guys, oh yeah, let me just close it. Yeah. So yes, students, with these students, like I'm there with the chat school. With these students, we have completed 2 mock papers. Whole means like whole, like just in like 6.5 or 7 hours, or maybe 4 hours. I took it yesterday, like 3.5 or 3.5. Yeah, like just in 7 hours, less than in 7 hours, we were able to make up the paper for 200 marks. Only and only if our conceptual clarity are there. So now I think you guys are in a good position to practice a lot of papers, and I'm very happy to like take up all the revisions in such an efficient manner. And yes, students, if you have any sort of doubts, you guys are always free to message me on Instagram, Telegram, and obviously on the chats for sure. And yeah, if you want, students, any question paper to be done, yeah, or any help, yeah, we'll be there obviously. And yeah, yeah, that's all for the day. Okay, students, so yeah, we'll be having the next meet for sure very soon. And yeah, this side, Chartered Accountant Ashwini Bhanushaali, I'm thanking you all for like having a good view all over, and yeah, being so much of supportive. And thank you so much, Suganya ma'am, for being there with me for all the 2 papers continuously. Yeah, continuously, seriously. So that's good. Okay, I'm just waiting for 2 minutes, and then maybe I'll just give you what are the important tips and tricks. So yeah, it's just that first and the foremost thing is, don't ignore any standard. Even if the standard is very small, it becomes important. Okay, even if the standard is very small, it becomes important for you all, because it is any which way is going to fetch 4 marks, and 4 marks is a very great opportunity for you to succeed. Yeah, and yeah, do as much mock papers as you can. Yeah, do practice a lot of exam kits, and please don't do SBR UK. Yeah, SBR UK should not be done. It's SBR International. Yes, students. So hope you all guys studied very well, get very good marks and get a superb rank and yet be an ACCA affiliate very soon. Yeah, maybe this video will help you out. Yeah, if it's helping you out, I'll be more blessed. Yeah, thank you so much, students. Thanks a lot. So yeah, see you soon. Bye bye.